Good morning and welcome to Traders Corner Stocks and Options Special Event. My name is Anthony Chapman and it's a privilege to be your host today. Settle in and get ready to hear some of the greatest trading minds in the trading industry. With an upcoming presidential election, the ongoing Israel-Hamas conflict, high interest rates and inflation that remain stubbornly high, the second half of 2024 promises to create some great trading opportunities, as you will see with our presenters today. On our panel today, we have handpicked the industry's top stock and options trading experts to join us today. They have agreed to share their most consistent and profitable trading strategies with us in a free online educational forum. Today's show is packed with great information and discounted special offers, so let's get started. Our first guest, you may have seen her on Fox News, Fox Business Network, RT America, Cheddar TV, or CBS News. She is an expert stock market analyst and the founder and owner of an international educational company where she teaches people how to successfully trade the stock market. Her trading methodology is based on one strategy called golden gaps with pinpoints, institutional money in the stock market. Here to present trade on the side of power money is the great Melissa Armo of the Stock Swoosh. Welcome back to Traders Corner, Melissa.
Thank you so much, Anthony. Thanks for having me, everyone. Good to be here on this beautiful Thursday morning, going into the last day of a week before a holiday week. Can everybody hear me? Sound good?
You sound good on this end.
Terrific. If people have questions as we go along this morning, just feel free to ask me and I will answer them as we go. I will try to watch my time. I think I have 45 minutes. Anyways, happy July 4th, everyone. It's July 4th next week, and so it's been some good trading here this week, considering it is going into a holiday week. Even I'm surprised how good of setups we've had, particularly in gaps this week, which is what I do, which is what I'm going to talk about. I'm going to talk about trading momentum and gaps. One of the big trades we had this week was Tesla. And if you trade, I'm sure you saw what it did in the last 24 hours. I do have one of those trades in here today. But again, if you have questions, you can feel free to reach out. You can always email me at melissa@thestockswoosh.com. You can call me at 929-3200-GAP. I do appear on every major news network talking about the stock market and the economy. We had some data this morning, which was negative, and of course the market rallied. That's all the market wants to do, it seems, is rally on bad economic data, which is kind of ironic that the market's cheering on bad news. So we'll see what that means for the next 6 months of 2024. But again, if you have questions, you can email me at melissa@thestockswoosh.com. You can follow me on Twitter, Facebook, YouTube, or Skype, or call me at 929-3200-GAP. So this is a good time, halfway through the year, to take stock of where you are and try to decide, are you ready to move into the second part of 2024 and be successful? Wherever your ear's at right now, if you're doing well, you want to continue to do well. You need to stay focused. If you are not doing well and you want to do better, then you have to do something different to make that happen for yourself. You know, everyone wants to trade the market. It's fun. It's great to trade from home and all of that, but you need to make money. If you're not making money, then there's no point in doing it. And very often I find people blame themselves if they're not making money. They say it's this thing, it's that thing, it's whatever. At the end of the day, if you don't have a good strategy, it's going to be hard for you to be successful no matter what you do. You can have the greatest risk management in the world, take profits, size yourself right, but if you don't have a consistent winning strategy, you're not going to do well in the market. So I plopped in here all the trades. This is through the 18th. I didn't put in the last couple of days. I'll have to add those, but we're at 492,047 for the trading room year to date. Again, by tomorrow, I'll add the rest of this month for where we are for the first 6 months of the year. My trades in the room are day trades on margin. So therefore, I trade on margin. You have to have a margin account to do them. I do not do options trades in my room. Now, I do options trades. This is a newsletter. It's a newsletter service. If you want to sign up and join, these are separate. These trades get emailed to you. You do not need a margin account in order to do options. You can open up a cash account and do options. And I risk more in my options. So I'm doing very well for the year on options too, 1.468290. This doesn't include the last week either. Doesn't include the Tesla, which I have the trade in here, which I'm going to talk about today. But I risk more in options because I want to take more size, because I want to get the overnight moves. And I also want to go through and look at what I'm doing in reference to some of the things that are a little bit pricey. Now, NVIDIA was one of the pricier things that we did. Now the stock split, so we're not doing that at the same price point, but I wanted to be able to do more expensive options. You could do one contract out. You could open up an options account with $2,000, which is a lot less than you need to actually trade on margin, by the way. So year to date, this is not including even the end of June here. Again, today's June 27th. July 1st is Monday. It's crazy. I can't even believe it. 1960777, and I will update this and I will put this on my YouTube. We've had a good year. Okay. I'm very focused on what I do. I'm going to talk about it today. Everything that I do is based on my own system that I created, and that's the meat and potatoes, because you need a quality system in order to make money. You've got to get good results. When I started trading, I was looking online, and there's so many trading educational places out there. You're going to hear some of them today. There's many, many strategies out there that people talk about. Some things are free. You can even find online. Much of the stuff that I looked at when I was trying to figure out how to trade, which is, God, 16 years ago now, hard to believe, 2018, when I started trading, much of it is really almost kind of the same, just repackaged to look very different, but it's not different. And I was very astute to be able to determine that myself. And then I just realized that I needed to do something different. I needed to do something unique. And I set out on my own path to create my own system, which is based on stocks gapping. Now, I do bullish gaps and bearish gaps. Tesla was a bullish gap. It was a big trade we did this week, but I do bearish gaps as well. I didn't have time to put this in here. We did WBA. You can look it up this morning. We shorted it. It was a gap down. We shorted it. We made money. Okay. So I took 3 years out of my life to develop my own system, which is very unique. And we're going to talk about that briefly today, a little bit today, but here was the Tesla trade. This was the big option winner this week. I actually did the 185 calls and the 190 calls in Tesla, and we were in these trades before it ripped up yesterday. And it's still higher even now, actually, but I got out of this yesterday. So last Friday, I sent out the 185 calls that expired tomorrow, which you could still be in, but I'm out of. It cost $325. Again, an advanced trader risk of 25 contracts. Risk was $81.25, sold at $11.50. Profit was $20,625, which was 254%. I thought this was a good exit yesterday. I knew it could possibly be higher today or tomorrow. But when you're running it with options into the expiration date, the closer and closer and closer you get, you got to take profits. This was huge profits. And then I want to show beginner risk too. If you risk $1,300 for contracts, you could have taken one. You could have risked $325 and still made 254%. And again, this is probably worth more today. This is probably over 13 or something today here for the value. But the whole idea of everything I do is based on what? Is based on the stock gapping. So let's take a look at it. So the day I called the trade, just want to show you here, the day I sent out the newsletter, the stock gapped. Stock close here gapped up. Okay, this was last Friday, the 21st. Rallied, boom, and then it took off like a rocket yesterday. Again, when you're trading, you have to get momentum in order to make money. I don't care if you're long or short. So the momentum in Tesla came in yesterday, and it had a big fat green bar. And again, when you're buying calls, what are you doing? You're going long. So we were already in it. And again, we did the 190s too. We were already in those as well. But this was a nice move up here in the Tesla. And again, we do the weekly option. So I'm doing the weekly. So this isn't 1, 2, 3, 4 days and something. That is not a big deal to me. That's not a long time. Again, this isn't swing trading. We're doing active, chunk it out. Take the trade, get in, get out. Buy the call, sell it. Buy the put, sell it. Again, we're playing momentum. Now, what is a gap? Again, we're going to go over this. A gap is the difference between the close and the open. So this U.S. stock market closes every day at 4 o'clock. So Tesla closed here. This was Thursday last week. And then on Friday, it opened here up higher than where it closed. So this was a gap up. There are also gap downs. What's a gap down? Let's take a look at it. Here was a gap down in Tesla. Stock closed here, gap down, open, fell. So at 4 o'clock, it closed at one price and opened at a lower price at 9:30. The U.S. stock market always has an open and a close, and again, is closed on a weekend. So my strategy is great because you're always going to get stuff to look at, sometimes bullish gaps, sometimes bearish gaps. I prefer shorts. And many of the day trades like I have in there in the stats for the room are shorts. Like I said, we shorted WBA this morning because I prefer to short because stocks sell off faster than they rally. And when you think about it, it makes total sense. And when you think about the idea of being able to find something that has a big move with momentum, that makes sense. Makes a lot of sense. And again, you have to use your brain when you're trading. You know, so many people just want to plop on indicators that their charting package will just, you know, put on their charts and figure, well, I will be able to just do that and then boom. But the reality is that's not really what you want, okay? You want to be able to see something and do it, okay? And then also be able to have it make sense for yourself. It has to be something where you're thinking it through, not just the moving averages. Okay, let's look at this. Here's another one. Oracle. So this was, what day was this? The 12th. Stock closed here, gapped up. Okay, stock closed here, 124, gapped up, 134, rallied, then what? Well, again, it was a call, or you went long it, okay? Again, stock closed here approximately 124, opened up here 134, okay? So again, what do you want to do with this? You got to figure it out. So I developed, my whole system was to look at a gap in the morning, the pre-market, before the market even opens at 9:30, try to figure it out. Again, think it through, use your brain, and I developed a system to rate the gap. The system is based off of points on the daily chart. This is what I teach in my class. So again, what I do is extremely unique. Why? Because I take a lot of time and care in the morning when I'm trying to figure out what to trade. And I also know what I want to trade ahead of time before the market opens. And that's very unique too. Because again, most people are trying to make up their mind at the very last minute, or waiting till the market opens, or waiting till 10 o'clock or 10:30 or later. And again, waiting for the market to figure out what it wants to do in the day. But I think through what I'm doing. And what I do that's unique is not only be able to figure it out, the momentum and having the big move, but also to have it all pre-planned out ahead of time in the morning. 26 things is a lot to look at on a daily chart, but that's what gives me the consistency in the picks so that I have more winners than losers. I showed the stats earlier. Again, I lose in some trades, but I have more winners than losers. And that's the only way that you're going to make it when you're trading. And then of course you have to have some big winners, which we did in the Tesla. And like I said, I stacked it even with the strikes, with the 185 and then the 190s. And any questions here? I'm just looking here to see if anybody has any questions. Let me know. Anyways, how do you make money in the market? Become an expert in one thing and you can do it. And then you add size. And then you add size, and as you add size, then you can take more shares, you can grow your account, you can make more money. If a stock drops and you short it, if it drops $1, you have 1,000 shares, you make $1,000. If it drops $1 and you have 2,000 shares, you make $2,000. So again, it's the same trade, you just add more size. But the bottom line is that you need a method. That's how you're going to be successful. You need a well-defined method. Without a well-defined method to replicate daily, how will you have consistent results? Even people that don't know what they're doing can make money in a trade, sometimes with dumb luck. And that's true, okay? It's funny because it never was the case with me. When I made money, I always was applying my skill set. I guess I was forced to do that, to figure it out. It was my destiny. Otherwise, I wouldn't have figured out what I know right now. But for most people, again, people can make money even though they don't understand why it happened or what it did. But not all the time. It's the consistency that matters. You need a method you can replicate that works consistency, because that's the only way you're going to be able to do this, whether it's part-time, full-time, for a career. The point of trading is to make money. Otherwise, why do it? You know? And when I decided I wanted to trade, I wanted a new career. I was doing mortgages and I wanted to switch careers and change careers. And so I needed to make money in order to support myself. So that's why I was so intense about figuring out the best pick to try to find it. If I could figure out 126 points, I would never get it wrong. It's basically trying to hone it down to the best thing. But anyways, I'm looking for a specific set of requirements daily and 26 points. The points are the daily chart. If I get a 20-point rating or more, then it qualifies for me to do the trade. If I don't get it. Simple, okay? So think about it. If you're taking a trade, you want more than 50-50 odds. Okay. You want high odds. You have to get consistent results to be successful. That's the big thing that many traders lack. They're all over the place doing this thing, that thing, the other thing. My background when I went to college, I'm a philosophy major. I have a BA in philosophy, and I'm a critical thinker. If you've ever studied philosophy, that I was taught and learned and read a lot and wrote many papers as a philosophy major to be a critical thinker, to look at things, to analyze things. That actually really helped me develop my own system. Strange as that may sound, because this is finance and money related and numbers with trading, but my philosophy major, my background in thinking things through and analyzing things helped me to create the system I use. It's a conditional hypothetical proposition every morning when I get up and I look at something. If this, then that. Same thing with WBA. Same thing with Tesla, and we just talked about. Like, I get up and I say, if this is doing this, then this is going to happen. If this is here at the price point, then the stock's going to drop. If it's here, then it's going to rally. And that's how I was able to develop my whole system then and do the whole 26-point system. It's the point of it is trying to determine who's in control. Because if you can determine who's in control, you're going to make money. If you're on the wrong side of the control, you're going to lose money. Okay. So if you say, well, the bulls are in control, then you want to go long. If the bears are in control, then you want to short. Again, the problem is a lot of people can't figure out who's really in control, because stocks rally and fall every day. That, just because something falls and it rallies or whatever, it doesn't necessarily mean that it's going to follow through. Okay. And the follow through is a key piece of it, because again, you want to make money. So again, let's take a look here at Oracle. Stock closed here, gapped up, rallied, continued, went up over 140, went up over 145. We did calls in this, we did a day trade. So who's in control of Oracle? The bulls, okay? Who's in control of Disney? This was one we did a while ago, back in early May. This was Disney, this was an earnings gap. Again, stock closed here the night before, gap down. I rated it per the 26-point system, and it said, wait a minute, it's gonna fall, and that's what I determined. So we did puts, and we shorted it. And again, who is in control of Disney? I said the bears are in control, and I was right. Stock opened here around 107, boop, boop, boom, fell all the way down, broke 100. See it? So again, when you're looking at something and you're trying to determine it, the control part of it is such a big piece, but I'm figuring that out by seeing the gap. Like, I can't predict what's going to gap. I don't know, like, again, the banks have earnings out in 2 weeks after the July 4th holiday. I don't know if they're going to gap up. I don't know if they're going to gap down. I wait for the gap to occur, see it, and then apply my 26-point method, which like I said, is very unique, because I'm taking the time, I'm processing, I'm thinking it through, I'm using my brain. But it's the focus of the gap itself that helps me determine it. So again, let's talk about some basics here. What is a gap? What is a gap? A stock gaps on the opening price today is different than the closing price of yesterday's trading. A gap is a break in price action from one day to the next. Simple, okay? So here was the Tesla gap, closed here, gapped up, and then that's where we did the calls, and then you saw where it went up and pushed up yesterday. And again, I think today was even higher. I don't know where it's at right now. How did I know that would happen? I rated it. I rated it using my checklist. It's a 26-point checklist. This is my strategy. This is it. This is what you come and learn from me, and then you apply the method yourself every day. How? You're going to rate the gap too. You're going to go through it, go through the points, rate it. And then that helps you to hone it down to decide what you really, really want to do. This was back 624. Actually, let's look here. 624 was here. Oh, that was this day. Closed here, gapped up. 624. Was that Monday? Oh my gosh, yeah, that was just Monday. So funny. We went long Tesla. So stock closed here, gapped up. We entered the stock long, 185.80. This is a day trade. You would have had to have a margin account to do it. With 2,000 shares, risk was 3,800. We got the rally, pushed up, got out at 187.40. Profit was 3,200. So again, this is a day trade. I showed you earlier the option we did. This was a day trade. This is a trade to have a margin. Now the difference is the day trades go super duper fast, super duper quick. So we're in and out in 5 minutes, 10 minutes, 15 minutes, and that's it. You're done. Now, if you took 500 shares, was $950 a beginner risk, you could have made $800. Again, $800 in 5, 10, 15 minutes. This is good money, people. If you times that by 5, as many days in a week as there are for you to trade, that's good money. You know, most people are losing. They're not even making $500 a day. On average, $500 a day is $2,500 a week. Most people are not doing that. $1,000 a day is $5,000 a week. And again, most people are not doing that. So you don't have to risk what I'm risking, which is an advanced trader risk to make money. You have to learn it. And you can if you have the money in your account, if you have a bigger account, but it's the idea of doing it. And you can open up a prop account with $5,000 and get 10-to-1 leverage and trade prop if you want to do it, you know, if you want to do the day trades. But the reason I like day trades is they're fast. The reason I like options is because we can get the bigger moves overnight, like I showed you with the Tesla, which we got that big rally up, you know, yesterday. Any questions here so far? How are we doing? Let me see. I was gonna say something else and I forgot. Okay. Anyways, the rating system helps me determine who is in control because that's what matters, okay? How do I determine who's in control? I use the 26-point checklist. This is my plan. This is my plan of action. Success requires a plan. Otherwise, you're shooting darts at a board and you're not going to get anywhere with that. So how do I know where stock's going to go in the day? I use the rating system and I figure it out before the open. That is so beneficial to be able to get in trades with good prices early out of the gate. This was one we did that was a short ACAM. Stock close here, gap down, open, fell. Again, stock close up here around 101 and change, gap down here around 92 something, fell, dropped, boom. This was a beautiful move. That was back in May 10th. But I knew I was going to do this before. But sometimes I know at 6 o'clock in the morning what I'm going to do, you know, that early. And it's like I said, it's if this, then that. I weigh the pros and cons. Every time I take a trade, I weigh the pros and cons. I want to be convinced that it's going to work. You must put the odds in your favor. I don't think enough people do that with their trading. That's why they tend to lose. They dig themselves into a hole. And then when people dig themselves into the hole, they're even more desperate to get out of the hole. They start doubling down and doing all kinds of things that they shouldn't do. That's when you should take a step back. Like if you're down money in the year trading 6 months into the year, halfway through, this is when you should take a step back and stop doing what you're doing if you're not making money, it's not working. You need to reevaluate. And there's no shame in that. There's no shame in that. You can't say, well, I've been doing this. I have to do it. I did this class. I invested in the class. People invest in classes. They don't work. They lose money taking trades and they just dig themselves deeper and deeper. There's no shame in actually pulling yourself back and reconfiguring yourself and say, wait a minute, I'm going to change what I'm doing. This isn't working. There's no blame or shame on you. That's life. People go through the process. People have to go through their process. That's part of it. Someone is, if your system fell in the 20 to 26 points, would I play a gap fill? No. No, I would not. I would not. Gap fills in general do not work as a method to trade, to make money consistently. And you can write that down in blood. Sometimes something does what you could say is a gap fill. Sometimes. If you're playing that all the time, you are definitely losing. Now, yes, I may rate a gap and it may not rate good, may rate 15 or 16 points or whatever. And then I, like WBA today rated good. But if it rated 15 points, would I have gone long it? That's what the one person is asking me. The answer is no, I would not have gone long it. And again, even if it would have rallied on the day, which it didn't, I still wouldn't have looked back and say, oh, I should have gone long it. And I'm going to explain why. And I don't want to get too off tangent here because I know I only have a certain amount of time to talk today. But the reasoning is my mind is so programmed to see something. Your brain is a computer. So it's the most amazing thing that you have. And people don't use it enough. Like my brain just sees something and I just do it and I just trade. So again, that's one of the reasons why being a room member with me is very beneficial because my brain works extremely fast and I'm so used to seeing things and I do it. So again, I've been trading nothing but gaps for 16 years. So it's like imprinted in my brain that I know right away when I see something and we do it. I'm talking about the setup on the day. I still go through the rating system in the morning, but I can look at something and say, I know this is good. I still rate it. I still go through and rate it. But my brain is programmed now to see things that I know are going to work. If you start to mess with that, then you're going to be totally screwed up. And you're not going to get that thing that I have, which is called intuition or a sixth sense. It's intuition. It's a sixth sense that I have because I don't do anything else. And I'm an expert in this. So again, this is another point. It's a good point. Again, I don't want to get too off kilter here, but people never really get that sixth sense or gain that sixth sense of intuition trading because they're trying to do too many things. They're trying to do too many strategies with stocks. They're trying to do futures, day trades, Bitcoin options, whatever. Like they never become an expert in everything. They never get an intuition or a sixth sense in anything. If I could spray in a bottle and sell it as a perfume or cologne, my sixth sense, my intuition, you know, I could make billions and billions of dollars. But the fact is, it's me and it's experience. You can gain that too, but not if you're all over the place. And again, that is something that I realized very early on. Very early on, I'm also an expert in shorting because we mostly short. But because I'm so good at shorting, I can see something like Tesla and I could say this is going to pop. So we were in it last week, actually. Like I said, I called that trade on Friday, but it's intuition. That is not something that I can give you. That is something that you will do with experience. The 26 points are on the daily chart. They're based on technical analysis. The intuition part is something that's an overlay that you get by trading with me in the room every day. And I think traders miss out on that because they're too all over the place looking for this golden nugget and one thing that they're going to take a trade and make $1 million and you know, open up an account with $500, make 100 grand in 30 days. That's totally unrealistic and that's not going to happen. And again, traders want to pay like $1,000 for a class and learn some amazing system. That's not realistic either. So again, you have to be all in. What you want is out there. I mean, I'm offering it to people. Someone that's experienced, someone that has a good system. I charge for it and I charge good money for it. So it's like what you want is out there. It's just you have to decide if you're going to go for it. So many people have been hit over the head, I think, learning things of losing money in the market for years. They start to lose conviction in themselves and they start to lose conviction in the market. And they start to lose conviction even in trading educational systems because they question then everything. Is this going to work? Is this not going to work? And blah, blah, blah. It's not impossible to make money in the market. I think everybody that trades knows that, or they wouldn't be wasting their time or money. But once people are around the block doing multiple classes and multiple strategies and losing money in the market year over year, they do tend to go into that negative mindset. And again, you're only hurting yourself doing that too. So, you know, you have to know it's a competitive environment. You have to accept that and be aware of it. And you also have to know that there are strategies out there that work, but you also have to kind of come to the conclusion that there's more that don't work than do. And that's why more people lose money in the market than ever will make money. And people also have these things where, like I said, they jump around a lot. So they never gain that sixth sense. It's a sixth sense that I have that tells me that if I start, you know, mucking up what I'm doing, flip-flopping, going long, going short, the same stock, the same day, twisting everything around into a ball, then I lose that whole thing. I lose that whole thing that helps me trade, that helps my clients make money, it helps me make money, and helps me just hammer on top of something like that and get it right out of the gate and then whop on the size or stay on top of something, stay on top of something, stay on top of something, or even do a strike out. Like we did the 190s. That was far away, that strike that we did. I don't have that trade in here, but that was far away when we did that trade. Somebody asked a question. When you purchase a call or a put option contract on a limit or market order, it appears on your platform you start out losing money in the red. What are you missing? I don't know what you're talking about losing money in the red.
I think that you know, sometimes we put in orders and it's like almost like someone's might be front running or something. I don't want to say that, but you ever put in an order and like instantly it's like, well, that's not, you know, it's,
well,
it's
you
just,
should be putting it. I don't want to get. I think you put in an order between the bid and the ask. If it pops up like that, It could, like, I'm just making this up. If you're buying a call, say for example, and you want to buy a call, you're not going to get the cheapest price of that call ever. So as soon as you're in, yeah, it could be, it could look like it's negative, even if it's by pennies, because you bought it between the bid and the ask, unless it's running straight up like a hot rocket. And again, I'm using an example as a long, because you're buying between the bid and the ask. You're never gonna, if the bid is, if it's 3 by 320, and I'm just making this up, you're not going to go long and get filled at 3. I mean, unless it's whipping up like a banshee, which actually, you know, kind of Tesla did yesterday. But you're going to get filled between 310 and 320. And so as soon as you're in, it may look like you're down, but you're really not. I don't consider that down. I consider that flat, because you're basically, there's always a bid ask. And again, spreadier stocks will have spreadier margins too in between, but no, I don't consider that down. Now, if you're talking about if it's moving and the stock drops back, you buy it at 930, 931, 932, and then it falls all the way down to 945. And again, this is if you're going long, and it was between 3 and 320, and it drops all the way down to 250. And then that doesn't mean that the trade is off. That doesn't mean that it's bad. It means you got in early, you were aggressive, and your expectation is for it to run up. I'm not doing options where I'm trying to make 25 cents unless I'm doing a bank option that only costs me 25 cents or 50 cents. I'm doing things if it costs $2, $3, $4, I'm trying to make $2, $3, $4. So I'm not scalping. I am trying to make dollars. So whether or not, I don't consider what you're saying, if you're down a couple pennies, I don't consider that down. So there was 2 examples there which you could have been down, where you're talking about where you first got in. Either one doesn't matter to me. So hopefully that answers your question.
Yeah, that was George. And yeah, I think you answered that. I think it's a very common thing. You put in an order and like it moved a penny or something in the other direction or something like that.
Yeah, that's not front running. And you could say, well, the market makers, blah, 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 blah. We wouldn't have a market without the market makers. And yeah, they're making money, and you need to know that. But it's not like they can screw around with the stocks that I'm trading. I'm trading Boeing. I'm trading Apple. I'm trading Nvidia. I'm trading Tesla. We're not trading rinky dinkers that don't have any volume that could even be possible. There's laws and rules that people have to follow. If the momentum's going to come in and the stock's going to get bought, and so institutional money is going to buy Tesla, it doesn't matter what they want to put that spread out or what they want to do. If that stock's going to rip up 10 points, then get the hell in it and be in it, because you want to be in it before it goes. Otherwise, instead of paying 320, you're going to pay 5 or 6. Do you know what I'm saying?
Yeah,
I wouldn't trade the SPY daily. George is saying he trades the SPY daily because the SPY isn't a good gap every day. Many times the SPY gaps up and falls. Many times the SPY gaps down and rallies. The SPY is not tradable every day. And again, that's one of the reasons I don't trade futures. There's not a good gap every day in the market. You can't do that. You're not going to be consistent enough, and you're going to be going against the trend and bucking the trend a lot when you're doing that as well too. But good questions. Okay, let's look at Boeing. Stock close here, gap down, open, fell. Again, what is a gap? A gap is a difference between the close and the open, here and here. So we had another gap there, another gap there. This was back in March. This was another day trade we did. I'm going to just quickly go through this in here. Oh no, this was June 618. Where is this gap? 618. Oh, here was that day. But a little baby one there. We shorted at 176.49. Boom, got out, made 39.50, and the exit was 175.70. Again, I'm trying to make $1, so this is close enough. 80 cents, $1, whatever. We got in, we shorted it, got the drop. That was on June 18th. God, that was 2 weeks ago. Anyways, you can day trade options. You could do gaps. You can day trade on margin. You can do whatever you want. This is another one we did, Oracle. We did a calls in this. We did the 140s. This is a nice trade, big trade again. We had to wait a couple days for it to go. You could have got out the first day, but I wanted the extension on it. It ran up to 145, got over it. It was 150%. Great trade. Again, you could have risked $1,000, made $1,500. This is a nice trade. Again, some of these things, because we're going into the holiday, have been taking a little bit longer than I thought. Even Tesla for 4 days, but they're going, they're moving. I'm just going to quickly go through this here because I don't want to run out of time, but there's a lot of reasons why people trade. Some people are just doing it on the side. You can still lose money if you're not focused. So I don't care if you want to do it an hour a week or an hour a day or, 20 hours a week, you're going to lose money if you don't know what you're doing. So you got to get serious about it, even if it's something you're doing part-time. And again, the focus for me is the strategy, which is gaps. And if you don't have a strategy, that's number one. Get a strategy. And number two is you got to get a strategy that consistently wins. You got to have more winners than losers. The reason I do gaps, like I said, is because gaps have large moves. They have big moves. They have momentum. We were looking at this in the market. Again, the market's been running up this year. Will it continue? Nobody knows. You know, we've had this big discussion in the room this morning because, again, the data this morning was not good. But for right now, everything I do, whether it's WBA, Tesla, I'm always looking for big, big money, or what I call power money in the market. That's what moves stocks. That's what moves the market. That's what moves everything that we do. Again, they could dump it, sell it off, in which case you'd want to short it, or they can buy it, like Tesla. Tesla's being bought. But the whole thought process of what I do, really, a lot of it has to do with common sense, but it also has to do with using your brain. And like I was saying at the beginning of the lecture, I think people get away from using their brain, thinking they can buy automated systems or stick on moving averages or any other kind of indicator, and it's going to tell them what to do. Those things should be supplemental. Those should not be things you live or die on. Because if there was any set of indicators that would tell you what to do 100% or even more than 50% to win, no one would ever lose trading. It would be very easy. And you wouldn't have to learn a class or learn anything at all. It's not the only thing. It's something that you can use as a supplement. It should not be helping you make your trade decisions where you're doing it or you're not doing it based on that. I think many people, like I said, just gamble. They really are taking trades where they don't even know why they're taking them. They can sort of explain why, well, it's sitting on the moving average, so I'm going to go long. But at the end of the day, that's not enough. It's just not enough. And things are tricky. The market's volatile, and I expect this to continue probably into the remainder of 2024. So if you want to learn my system, it's called the Golden Gap System. It's a 26-point checklist that tells you what direction to trade the stock on the day. It tells you what direction to take it if you want to do it. Again, under 20, you're not supposed to do it. The rule is 20 or more to do it. And again, like I showed you with that one Tesla trade, the benefit of trading gaps is it can be done very quickly. For me, it's about working smarter, not harder. I live in New York City and I live along Central Park and I love living here. I can go out this afternoon and enjoy the park. It's summer. I don't want to sit at a desk all day till 4 o'clock. I don't want to do that. You know, and I'm at a certain point in my life where, again, I'd rather make as much money as I possibly can, as fast as I can in the first half an hour of the day. And I don't know why anybody else wouldn't want to do that, to be honest with you. But at this point in my life, I'm just like, I don't want to sit and work and try to squeeze 25 more cents out of something and wait another 5 hours. That's ridiculous to me. You take it, you get in, you get out, you're done right out of the gate in the morning. And if you're in an option and you put the option on, you can come back and check it at lunch. You can put the sell order in. It's a limit order to fill you if it hits, or you check it before the close, or you check it tomorrow. You know, you don't have to sit and, you know, lean on your keyboard if you're doing options either. But anyways, like I was saying, it's institutional money, big money that comes in to the market, and it's moving stocks. It's moving the market at all times. The point of a checklist is to help you stay true to yourself, what you're doing, instead of going all crazy in your head, true to the system, focusing on it, chunking them out, taking profits, getting prepared ahead of time. As early as you can, get up early, do the prep work. Then you can make money, and it's about honing it down to get that best pick. If I'm doing that very early and I have all that situated and organized, I can be done quick and soon. And again, it's about getting it for having more wins. Otherwise, you're floundering after 9:30 trying to figure it out. So the quality of my system is really the value and the information, which is trying to figure out what's going to go, what's going to have the big move, how do I do it, how do I find the momentum. I find it in the gaps. I find it when I get one that rates quick. Rates over 20. I don't flip it like someone said to me earlier. And again, they have big moves. So that's part of the benefit also of trading with me. We trade stocks that have big moves. WBA had a big move today. That is a cheap stock that had a very large move today to the downside for that price point. You know, I consider that a big move. We had a good trade in that. But again, it's momentum trading. What creates the momentum in a gap? It's institutional money. That's what we're following. That's what we're doing. Big footprints that come into the market, big professional traders, hedge funds, we're following that. And again, that's one of the reasons why all that stuff that's happening with interest rates and the economic data does impact the market. I mean, you got to watch what's going on too. Now, can you do this if you're a beginner? Yes. I teach everything from nuts to bolts of the class, charts, everything. You would open up your own trading account. You can wait to do that after the class. This was another one that we did. We did the BA puts, 613. Oh, here. We shorted BA here, got the drop, boom. We did the 180s. This is another nice trade. 180%, we did it on the 13th, and I got out of it the 20th. And again, this is cheap. To be able to buy a BA put at 250 cents, I thought that was cheap. You could have spent $1,000 and made 180%, which is a good trade. So I do calls and puts like I told you, but I'm mostly short in the room, but I'm always looking for this very specific thing, which definitely gives me an edge because I'm taking the time to analyze it and rate it and go through it. And one of the things that I like about shorting is, again, you can get the moves quick and fast. Fear and panic coming quickly to a stock. Again, pull up the chart. I don't have it in here of WBA today. Great example of a good gap and fear and panic that come into a stock. So if my system is something that you're interested in, you can email me and ask me questions. But if you're looking for something that has a high probability of directional bias for the entire day, big moves on the day, early confirmation, we're doing the trades early, and precise entries with follow through and a good risk to reward, this is what you're going to learn from me. So you will learn in my class the 26 points. You will learn the entries. You will learn the exits. And again, you will be able to mimic the trades that I'm doing if you join the room. Someone's asking a question. But it's the same 26-point system for company stock during earnings reports. It doesn't matter. You see the gap and you rate it. So I don't change the system depending on what's happening, why the gap is occurring, if that's what you're asking. A gap's can happen for many reasons. Could be earnings, could be negative news, could be with the market, could be with the sector, could be like BA this year has been getting pummeled because of accidents and news reports and things like that. Doesn't matter the reasons. I'm not changing the system based on that. No, you learn it, you apply it, you do it. So my class is called the Golden Gap course. I teach it once a month. It teaches the strategy and how to trade gaps. The course teaches a 26-point rating system to find the best stock to trade each day. The course also teaches you how to play the stock on the day, and the course teaches you chart analysis and technical analysis on an advanced level. This is a good quote because it's from Warren Buffett about investing in yourself. And again, if you're doing something and you're trading now and you're losing or it's not working, then you have to, you may say, well, I already paid for such and such class. Well, you're going to have to invest more in yourself then. You're worth it. You're worth it. You have to look at your life and your future as you're worth it. If this is something that you really, really, really want to do, you have to look at it like you're worth it. And you have to love what you do. You're going to do it for hours and hours every day, whatever your job is, your career, and you're going to do it for a long time, and it's going to be a big part of your life. If you don't love what you do for a career and you want to become a trader, it's worth the time, it's worth the investment, no matter how many classes you have to take, no matter what it costs. If this is something you want to do, you are worth the investment. And if you're doing a job that you don't like, which I was when I was doing mortgages towards the end, I hated it, couldn't stand it. And I was working 80 hours a week, more. I was probably making $1.50 an hour. By the time I left, I couldn't stand what I was doing anymore. I said, I have to do something different with my life. And it didn't matter what it took. I was willing to do anything to make that happen. And it took me 3 years to develop the system that I'm teaching right now. But again, you also have to get value out of your education. You're going to learn the points from me and you empower yourself to do it because you can do it yourself. So you learn a whole system in the Golden Gap course. It's a full 2-day course on how to strategically find, pick, and place stocks that are professional bearish gaps. Class is online. The next class is great timing here, right when earnings season starts. July 13th and 14th, the class is $69.99 US. Class is online. You can be anywhere in the world and take it. The cost for the combo, which you get the trends in the Golden Gap, you save $500, is $7,999. Class is online. Now I'm doing a huge package for July 4th, so the timing is good. If you're interested, if you want to sign up, this is big. You will get the Golden Gap course, the trends course, the options course, the wealth manifestation course. Here's all the dates. And you will get the trading room free through the end of 2025. All of my trades for the rest of this year and next, the options newsletter and the market report through the end of 2025. You wouldn't have to stay, if you wanted to pay for the room and stay in the room and get the options, you wouldn't be paying anything until 2026. So this is really big. People have already signed up. This is huge. Again, I'm offering this through July 4th. This ends on July 4th. Let me see if there's any other questions. I think I got George's questions. Reynolds' questions. Anybody else? Any other questions? If you're interested in this, you must email me for sign-up forms at melissa@thestockswoosh.com. Any other questions from anyone? How are we doing?
Good. Are you able to hear my audio?
Now I can hear you.
Okay, great. I switched over. I'm able to see your slides now. Thank you. I appreciate it.
That's
I was having
okay.
some technical issues, audience, so I appreciate it.
Today.
Yeah. Thank you. Thank you.
Listen, thank you so much for having me, and happy July 4th. Happy July 4th. Again, here's my email, melissa@thestockswoosh.com. If you're interested, email me in the class. If you want to sign up for the July 4th special, you can go to my YouTube at the Stock Swoosh on YouTube. I have tons of videos there, and I have tons of videos of Central Park, actually. Tons of great videos of Central Park, actually, that I've been posting on my YouTube, which people love.
Excellent, excellent stuff.
Thank you.
Yeah, thank you, Melissa. Always great when you're here. I want to thank you for making such a generous offer to our audience today. It's always great to have you on Traders Corner. Ladies and gentlemen, that was Mrs. Melissa Armo of the Stock Swoosh, an expert at trading gaps, as you can see here. If you are interested in learning a rules-based strategy that has the potential to garner fast profits, trading just 30 minutes a day, then you can find Melissa. Special offer in our chat box. Melissa, yeah, you put it there, so we're all good. That's great. And yeah, so you can find Melissa at thestockswoosh.com. Thanks again, Melissa, for joining us today. We hope to have you back on Traders Corner.
Thank you so much. Have a great day.
Thank you. We appreciate it. All right, traders. I do apologize. I had some issues today. They were mostly just internet type issues. So I was on my phone trying to do everything. Now I'm able to see the slides and everything. However, it appears that our next presenter is also having some issues. So I do apologize. We're trying to fix that right now. But yeah, the next presenter is Toni Hansen from Mastering Market Pivots. And this would be the first time of me introducing Toni. So I'm not real familiar with that person's work, but I am really familiar with Melissa's work. She's been on the show many times, long before I was even a member of the audience myself. And I get her emails and stuff, and she's just killing it right now. So yes, we are. I apologize, guys, but we are trying to figure out the issues that Toni Hansen is having right now. So if you can, if you'd like to, can I get yourself a tea, a coffee, a snack, or something while we work on getting Toni all set up. So I'm gonna put myself on mute and personally try to work on this problem as well. So hold on, traders, hold on. But I think we start off extremely strong with Melissa. I mean, she's really incredible. So just hold on, traders, and I'll be back soon. All right, traders. We're still trying to figure out the technical issue with Toni Hansen. It's been one heck of a day for technical issues. I had my own issue today. For the past month and a half, we've had at least one person have an issue. So now we have 2 already. Incredible. But we're all over the country, so the United States, and so we have different varying problems usually as well. It's not normally just GoToWebinar. I'll put Toni's website in the chat as well for anyone that wants to maybe do a little research on her. That's one thing I do, traders, is not too long ago I was an attendee just like you guys, and I do my research on everyone as well individually. I gotta say, like, you gotta find the ones that click with you the best. I believe that everyone that they've had on this show has had a really proven track record. And then I go and I do my own research and stuff, and they do a great job just in these presentations alone, but I always follow up and do more research, and I make a little contact maybe, and asking questions and stuff like that I think is incredibly important. Obviously some traders and presenters are going to be more profitable than others, but if something interests you that they say, take advantage of it, ask questions, learn something from it. Melissa Armo said, she quoted Warren Buffett, which I love this quote as well. And it was said a little bit different in her presentation, but basically said the best investment you can make in your life is you. And that's exactly what all of us are doing today. I'm learning as well. I always like to learn. I got multiple master's degrees and stuff like that, and I'm just big on learning, investing myself. Your health, mind, body, heart, all of it is so important. We got to balance all these things out. And I think it all starts with just having a strong foundation and base. And all of us are going to go through periods where we don't make money. I mean, as traders, we lose. We don't always win, but you got to take that as an opportunity to learn and to come back. If you bury yourself, screw it, just come back. Find a way. Personally, I've blown up accounts more than once. It happens. It happens, man. I'm on a really, really good run right now. For the past 9 months, I've been doing really good. I'm really hard on myself. And I get upset. I get really upset, just like you guys are. I worked on trading floors in the past in London. I'm here in the States right now, and I'm an American. But I've been on multiple trading floors in the past. I've had many friends who trade, not just prop traders. I've had friends that work at all the major banks. I've worked at 2 different major banks as well. And us traders are usually very, very up and down, just like the stock market. Stock market pretty much dictates that for us if you're about making money. And it's not just about making money. It's about getting better every single day. And I think what bothers me more right now is, I take a step back, I beat myself up, I take a step back, and I say, you know what, I'm doing darn good, but I do not like losing. I realized that about myself. I always knew that I was a competitive person, but I never saw myself competitive against my colleagues unless, maybe they're trying to challenge you, and, sometimes you got to push back. Okay, cool, I'll do that, no problem. But working alone as a trader, and I say working alone, but not really, but working alone as a trader, as most of us are sitting at home doing this on our own, I realized I'm making money. I'm making way more money than, I guess most people do, average 9 to 5 or whatever. I think I quit beating up myself. So I don't like to lose. I'm gonna lose. I have losses. But I got to look at the gains and say, look, you're making money, you're doing everything good. You're learning from your mistakes. I'm always making mistakes as well. All great traders are going to make mistakes. I'm not saying I'm a great trader right now. I'm still learning, but all good traders make mistakes. And I think what I was starting to do was I was starting to look at my wins and losses and not my larger profit margin. So if that's something that hinders some of you guys, you know, it might be an eye opener for others as well, and say, hey, wait a minute, I'm making money here, but I'm just not happy with the wins and losses. And that's the competitiveness. And I realized a long time ago about myself, but really hit it hard in the past 2 months, is I am most competitive with myself. And that's the best style of competitiveness I could think of. Because if you're competitive against yourself, then you're constantly wanting to improve. I'm going to look at if there's any chat messages or anything, feel free. You know, we could start a conversation here. Yeah, I don't see anything, but if there's any topic that any of you guys would like to mention or something and ask my opinion about, I'd be happy to share anything that I know. Like I said, guys, I'm just a prop trader, just like you guys, and I've been on a great run. I think Melissa, you know, she said it, she always has something great to say, and a couple of things she had mentioned is, you know, we are computers. Well, that's so true. We quantify things and process things. And as humans, we've built computers to imitate the human body and mind and intuition, she said. You know, that's the one thing. That's the one thing that, you know, the computer can't do for you that we could do, is this intuition. You know, our computer within ourselves is just so much greater than anything that any of us could create, you know, physically here on Earth. And, you know, we process things so much faster than, you know, we could get all the variables up, you know, and to make a decision. You don't want too many variables, I don't think, to crowd your decision making. But again, it's all about your style of trading. We all have very unique styles of trading, and looks like our technical issues are resolved, or they will be soon. So it looks like Toni will. Oh no, I guess. All right, looks like no, Toni is not ready, and yeah, I don't know. All right, we're still working on it, I guess. All right. So anyway, guys, invest in yourself because you are your own best investment. That's what Warren Buffett basically was saying, and it's true. You know, you have to have the best you can, a good diet, a solid base, a solid mind, and some people we have on here, they talk about the psychology of trading. You know, that's a big part of it. And Melissa said intuition. Well, our intuition is we could look at it as it's a computer processing, you know, and it's such a strong computer process that we can't even define it really. We cannot define intuition. And so you work off, personally, I also work off of, you have to work off of intuition. You don't have to. There are so many great alert services. You could literally just trade off of the alert services, but you got to find a good one. And there's some good ones that we've had here at Traders Corner. Many great ones. And there's going to be some today as well. There's going to be many today, I'm sure. I'm just quickly looking at the list. I could think of two just looking at it very quickly. So the alert services, maybe, you know, some people don't always have that trader's edge of intuition, and you can rely on these guys. And I also, you know, another thing that is extremely important for me is being a part of a community. Being a part of Traders Corner, I think, is important. And if you could link up with any of our panelists today, any of our traders, it starts to put you into a community. And we work alone, you know, when we don't have a community as traders. So it helps. It helps because you realize that other people have the same exact struggles as you do. And if you could start to realize that other people are going to have the exact same troubles that you have, you're not going to beat yourself up as much, probably. Some of us are just so hard on ourselves, but yeah, probably. All right. Michael Brighton says, at first I wanted only a trading plan that didn't have the patience, psychology, quiet mind to play it and stick to it. Now I realize risk management and psychology are so important factors for consistency and success. So true. So true. And that's not something you think about at all when you first start trading at all. You have no idea about this. And then you're working alone and you're working some money. And you could do a risky call every once in a while. And I mean call or put or stock or whatever. And then you start to really challenge your psychology. And the quiet mind, you know, that's a great place to be, but it's also an eye opener of who you are. Maybe, you know, you start to explore of who you are, and it's okay to do that. And it might feel uncomfortable at first, but that's progress. Realizing these things is progress because you're gonna get better. You're gonna absolutely get better. All right, I'm just gonna check back again. Looks like Toni is here. So, all right, excellent.
Hey, gang.
Hey, Toni, how are you?
They told me that I was supposed to speak at noon Eastern. So was I supposed to be here a little earlier?
You know, I'm not real sure. I had some technical issues myself today, so I assume you had technical issues as well. But no, thanks. If you had to come a little early, we so appreciate it. There was some sort of miscommunication or something.
Yeah. Well, hello everyone.
Hi, Toni. Do you want me to do a quick introduction for you?
Yeah, that'd be great.
Okay. All right. Ladies and gentlemen, our staff at Traders Corner sifts through hundreds of pro traders and brings you the most credible and qualified traders to participate on shows. And up next is one of the most respected technical analysts and traders in the industry with a high reputation for accuracy in both bull and bear markets. She began her trading career as an equity swing trader in the mid-90s, and she's since expanded into many other sectors of the market. Her style of trading and market analysis transcends both time as well as market vehicles, making it attractive to investors and traders of stocks, futures, options, ETFs, commodities, and Forex. Here to present Mastering Market Pivots is Toni Hansen. Welcome back to Traders Corner, Toni. I think this is my first time introducing you. I'm a little bit new trader, so thank you. This will be really informative for me as well.
Well, how long do I have today? When would you like me to wrap up?
Well, we usually do 45 minutes, but if you need extra time, we could do extra time. Could you, if there was a problem and you were supposed to start at noon, would you possibly be able to do until 12:45?
I can.
If not, it's no big deal. You end when you need to, and we'll pick it up.
Wonderful. Yeah, just shoot me over a message in the chat box.
Okay.
When I am running out of time, and
yeah.
Thank you, Michael.
All right. So yeah, feel free to start us going here. I'm excited.
Awesome. Let me get my screen up for you all.
All right, traders. Looks like we got another really great presentation here.
Thank you. All right, folks. So welcome. I appreciate the introduction. Like he said, I've been trading since the mid-1990s. So basically, when online trading was first coming on and grabbing a hold, and I've been to the floor over the last couple of years. There's not a lot of floor traders left these days, are there? So many folks are heading over to online trading, and I've traded pretty much every market vehicle under the sun almost. I will say I stay away from Bitcoin for the most part, but it's like when the Forex pairs came online, gosh, over a decade ago now, but they used to be fairly unregulated. You'd have a lot of differences depending upon what broker you were trading with. And we were seeing a lot of the same thing with Bitcoin. Over time, it's going to become more and more regulated and become a safer market. But I tend to be a little bit slow in adopting newer markets. But the nice thing about it is that no matter what I'm trading, the strategies that I use for one market will go and transfer to any market in any time frame that you trade on. So it doesn't matter if you are purely an investor or if you are a scalper. The things that I'm going to teach you here in today's class are going to be applicable to pretty much all markets. So as we kind of get started here, we're going to be talking about market pivots. So these are zones where we're looking at new trends to begin or the end of an older trend. So it can be useful in helping identify your target levels. So give you a heads up, hey, you know what? I need to be exiting my position here or protecting some of my gains at this level because I'm likely to see a correction. And it could also be used to help identify the beginning of a new trend. And I'm going to start by showing you exactly how powerful this is. I'm going to show you some trades from a year ago when I gave this class, and I'm also going to show you some trades from last week when I gave this class and today as I'm giving it. And every time I give like the same class, I basically just update my material, like to use examples from the most current markets I can. Oftentimes they're trades from that very morning. I will say I did not get in here in time to trade this morning, so I'm going to show you some stuff from yesterday. But we are going to be looking at mostly the index futures right now, and that's simply because that's currently what I'm trading the most. And it's not because it trades better than one market or another. It's because of where I am living. I'm currently in Arizona right now, so I'm 3 hours difference from the East Coast. When I was living over there, I was trading more stocks at the open, trading a lot of the gap plays and things like that. So right now I find that index futures are a lot easier for me just because I don't have to do the scanning through lists of morning winners and losers and things like that. When people often say, you know, you can't actually pick the highs or the lows, right? Well, you actually can, and there's many tricks that you can use for it. Now, when you're looking at pure pivot trades, obviously that can be really risky. So there's a lot of things you have to keep in mind, and I'm going to show you going from some of the most extreme examples of picking the absolute highs and lows within a couple of ticks, which by the way, my traders see me do this every day. I trade and teach live from noon to 1 o'clock Eastern every day. So folks that have been with me for the last couple of decades, they've seen this live. And it requires a lot of patience, a lot of discipline, and really having those checklists for your strategy so that you're not just trying to hit, and just hope you're getting lucky. You need to have a very solid plan. And what I'm going to talk about today are some of the things that go into my trading plan. And we'll look at a couple of different strategies. Two of them in particular I'm going to focus on the most here. And the awesome thing about this is that one of them actually even triggered here this morning. I was a little bit late, didn't quite catch it when I stopped in, but I'll show you one that I did trade this week that is the exact same pattern as what we had this morning. So when we think about, you know, technical analysis and looking at charting and such, we are looking at human psychology. And the charts are just a representation of human psychology, and we are very predictable. We like to think we're all very unique, right? But we're all unique in our the exact same predictability. So we're unique in being unique, I guess we could say. I came from a background actually, anthropology and archaeology. So studying human behavior and repetition over time is something that was a focus of mine. So I gave this class, first of all, about a year ago, and the chart on the one side is from February of that year, and then the chart on the next slide is May of that year. And what I want you to see here is that these are calls that are really close to the bottom and the top. So this is just taking it from a class that I gave that day or the next day after that, where I was talking about the pivots. Now, what I want to share on this slide, I'm going to grab my pen here, because this is going to apply to today and this week, is a couple of things. We have things such as momentum shifts. My pen is not very bright, is it? Let's see here. I'm going to try we'll go for the highlighter. So this zone down here, this is something that we see as a reversal pattern over and over again. And I'm actually going to draw the template for this. So what it looks like is we come down, we get a pivot. We come down and we get 3 consecutive lows, and then we get another pivot. This entire sequence here happens over and over and over and over and over and over again. And in fact, we have a perfect example of that up in here on the Russell this morning. So right around 11 o'clock, a little bit of a difference. This is that false first low right here. And then our 3 lows aren't quite consecutive, but you can still see that shift in there. And then we pop and we get the little correction. So these are both versions of the same strategy that are happening here. And this one is from today, and then this one is from a year ago. Now, the second portion here, this is a pattern that I call a phoenix. And that's what you can see on that bottom chart there as well. And this is a beautiful type of reversal trade. So you can use it as a scalp, which is what it wouldn't have needed to have been this morning, but you can also use it as a full-fledged larger trend reversal too. It just depends on what things are doing on the larger time frames. So we will be looking at those different aspects as I go through the class here. Clear this. And then this next slide that you're seeing, this is one from about a week or so ago when I was, well, look, it looks like a couple weeks ago here when I was doing this class. And again, it was pulled from that day or the day before. And what you'll notice here is that when we're looking at the one from 2023, and then we're looking at the one here from June, what you can see is that we have that drop. We've got the shift with those 3 lows and the pivot there at that point. And then at that point, then you can start to watch for things like the Phoenix to happen as well. But this shift in momentum here is exactly the same as what we saw last year too. So the core thing that I'm wanting to instill here with these images is just that the market is very repetitive. All of the images you will see here in this presentation are from classes that I was giving the day of or the day after the market action. So you are looking at live calls and how those repeat. So here's an example. This is from Tuesday this week. And we had that same kind of shift that was happening here in the morning. And we are coming in, getting those 3 lows. This actually came in and did another 3rd low over here too. So this ends up being that false first low. But what I want you to see here is kind of just how close to that absolute low you really can get when you know what you're looking for. So I've only taken a couple of trades this week, and this is one of them. And we're going to come back to this because this is a strategy that I want to share with you, and it is what happened in the NASDAQ this morning. So if we look at this NASDAQ chart up here, this is the exact same reversal setup. So you've got the 2-wave movement here, and then the pivot and the shift. So this is the one where by the time I got in here this morning, it was already down in here. And usually what I want to use as my entry trigger is up a little bit closer to that high there. So I kind of missed that first entry point on this one here. But what I want to show you is the fact that it is the same setup, it is the same strategy, and we will come back to this. So when we're looking at different projection points in the market, what I'm going to share with you here today are a couple of what I call the building blocks of price development. And so we're going to be talking about those building blocks here in today's class. So really good question there. When we're looking at how predictable the market is again, this is my class from my class that I gave yesterday. League of Traders, we meet again at noon every single day. And what you can see here is this blue line, or blue arrow right here. This is where we were at when class was going on. So we had seen that first kind of initial drop, first little correction, and then we were starting to drop again. So the drawings that you then see, this is a screenshot from my class yesterday, are what I was looking at as a projected price development for this. So what you'll notice is I projected not only the next move there, but also the next move down, the next move up, and the next move down. These were the projections that I had. Now let's look at what happened. Here's our outcome. So this is how accurate, once things are, once you understand like the basics of price development, you're going to be able to understand not just what you're going to be looking at as the next move, but also what the next several probable moves are going to be. Now, things that you might not be able to predict as easily are what that momentum can be. That momentum can shift on each of those moves, but you really can get a core feeling for how that price move happens. So this again is from yesterday. This is our projected afternoon for yesterday afternoon, and over here is the outcome. So having a good feeling for what to expect in the market and where your high probability levels are. This is do or die here, DOD. That means that is where it is most likely to trigger a new setup or a new impulse move, as we call it. So the impulse move is that first building block of price development that you need to think about and understand. And an impulse move is part of trend development. And what it is a core movement in the market where momentum is about the same and you have the same size movements repeating over and over and over again. So you know that if you're starting to see a smaller time frame setup developing, once you've already hit that average impulse move size, you've got a better chance of getting a reversal trade coming into play. So that 2B pattern that I shared with you guys from Tuesday, this is another version of that, except this chart is again from 2023 when I gave this class. So this is the core impulse moves here, but we also have smaller impulse moves as well because the market is fractal in nature, meaning we're going to see repetition over and over and over again. The more repetition of impulse move sizes that you see in a row, the less likely it's going to repeat. So if we're looking at one impulse move, a correction, two impulse moves, a correction, three impulse moves, the probability of this being able to put in a fourth impulse move right here, that's the same size, is very slim. We see it happen maybe 10% of the time. Instead, what is likely to happen is that you're going to go into a longer correction and you're going to start to see things widen up in that trend. I tend to focus more upon 2 waves in a row than I do 3. And I think of these 2 middle portions as the 2 waves of correction. So we can often see a larger impulse move where you will get the same size trend here, but you will get those 2 waves of correction looking like this instead. So that's just a little bit of how trend development unfolds. You can see that 3-wave trend over here, 1, 2, 3, and each of these corrections is about the same size. And that's actually what we saw on that previous chart of yesterday's projected outcome as well. It was based on originally looking for 3rd wave on the downside. and then looking for exhaustion of that trend. So if I go back to that slide, you'll see that. Let's clear this. And I wrote on it using my PowerPoint. Here we go, erase all ink. Okay, so if we look at that previous slide again, what we were looking at was wave 1 down, correction, wave 2, correction, wave 3. So I was treating this as a 2-wave correction move, and this being the first main wave and this being the second main wave, even though we had that smaller middle wave in there. So our first building block, you guys, is that impulse move, that trend, and looking at the trend count. So here's some examples of some smaller impulse moves that take place. And then here is our trade on Tuesday. So you can see the bigger impulse moves in blue. And then look at how we start to get these smaller measured impulse moves. So what's cool is that on Tuesday, if you look even in this section here, you can see 2 smaller measured impulse moves as well. So this pattern is one that I've dubbed a 2B, and it just stands for 2 bottoms. But what it is it's a second bottom that creates a trap. So what we're looking for is a low that is above the previous low. And then we're looking for a break to a new low where that second main impulse move down is about the same size and momentum as that first impulse move down. So when we saw that on the NASDAQ this morning, we saw that same thing happening. Let me grab that chart again. So on that NASDAQ chart up there, you can see that, grab my pen, we have that first impulse move, brown is not a good color, and then the second impulse move here, and that they're both measured in terms of how large that size is. And it's also very comparable to some of the other waves that we've seen where that momentum is the same as well. So in this second portion here, there were even 2 smaller waves also to help with that exhaustion up here. So this pattern here is the 2T. And I call it a 2T just because it's 2 tops. Again, you've got the high that is slightly under the previous high, and then you've got the high that is slightly over that high. Question, do I use Elliott wave theory? Not per se. So when I was teaching myself technical analysis, there wasn't a lot of education in the markets. And I don't know if that's like a good thing or a bad thing, because the good thing is that I didn't get sidetracked by anything else that was out there that could be erroneous or just not very profitable in the long run. But on the negative side, I didn't have a lot to go on. So everything that you're seeing in here is something that I was teaching myself along the way. These aren't ideas or concepts that I picked up from other people. It's not that other people don't have similar ideas or concepts. It's just that when I started trading, there wasn't the education out there for it. Again, it was still predominantly floor traders, and we were just coming into the realms of online trading at that point. So I know some basics on Elliott wave, but you could not say that I trade Elliott wave per se. In fact, Elliott wave looks at, their basic is like a 5-wave trend, which is basically 1, 2, 3, 4, 5, and then the 2 waves of correction. And you'll see this pattern over and over again. But the difference is that I treat this as 1 wave, and then I treat this as my second wave, and this as the 2 waves of correction, where we can also get 2 waves of correction in both of those too. And that's just because this can form in many different ways. So we can get the extreme first move, shorter second move, more extreme third move. But the thing that is the same is the corrective activity within these. Let me clear this here. So as we are looking at these impulse moves, I'm just widening up my chat so I can see your guys' chat a little bit easier here too. Let me know when I need to wrap up here today. So here again, this is this morning, and then this was on Tuesday, the same pattern, just as a reverse. Now, what is interesting too is that I used that same impulse move action to help me with the target on this. So the predominant trend on Tuesday was a bearish trend, and we were looking for more downside on that trend. So what I did was I used this impulse move here, which is a little bit weaker. And then since this was just a slightly lower low, I used that to identify my target level. And that's what I used as the exit on this point, because I was still looking at the potential for this to put in another low, which it did end up doing down here and creating another buy setup down here. Basically creates this kind of rounding off at the lows, like what we saw on the Russell chart a couple of minutes ago. So these impulse moves can help not only with identifying your entry point, but also identifying target levels. So if the momentum is the same, you want to watch for previous impulse moves that have that same or similar momentum. So here again goes back to looking at that previous one from 2023. And again, it's also a 2B here. Trigger point on the 2B is here, and then this went into a Phoenix. Now, not all pivot reversals have a momentum shift before the new trend continues. So what you need to watch for, though, is that if you do have a momentum shift, that can give you early knowledge that that move is looking to reverse. So momentum is our step 2. So impulse move is step 1, momentum is step 2. What we are looking for is a shift in momentum. So here is the rate of change of that previous impulse move where we've got the 2 measured impulse moves. And then as this is coming in and putting in a new low, we still have that same momentum. So using this entry point as a 2B to trigger the reversal is going to be a higher risk setup. It's lower risk if it is like what we saw on the previous slide, where what happens is that the momentum of the 2B itself shifts compared to the previous downside. So when we get that shift in the momentum, it's going to have an easier time reversing and continuing that reversal with stronger momentum. So if you don't have that to start with, you can still watch for momentum shifting based upon how it's bouncing. And then here is the change in the channel. So this could have even conceivably gone into another 2B at this point. Let me show you what that would have looked like here. So if this had come up a little bit weaker still, this could have come back down and created another 2B where it would have looked more like what happened on Tuesday in the Dow. So you would have had that stronger first kind of drop over here after that initial low, and then that shift in the momentum. So this would have been a potential pattern to watch for that would come next after the one that was over here. But since the momentum shifted even farther, it didn't go ahead and put in that lower low. So a 2B happens like this. It has the shift here, low, lower low. A Phoenix starts out the same, except that its 2-wave correction goes more like this. So you have more of a change in momentum. And there's many different variations of each of these patterns, but this is what the core textbook type of pattern would look like. So you're looking for changes in that next channel compared to that first channel. So shift in that momentum. And the bigger the time frame of that momentum shift, the more likely it is that you're going to be at that absolute low. So if you're not seeing a momentum shift on a bigger time frame, you're only seeing it on a smaller time frame, well, it can still give you a smaller time frame scalp, but you might get flushes to slightly lower lows or slightly higher highs as that trend tries to round off a little bit more.
Hey,
So
Toni.
yeah, go ahead.
I apologize if there was any miscommunication of start time today.
Sure.
But I was informed that I guess we're going to try to stick to the original time frame.
Okay, so what is that?
I guess it was supposed. I don't know. I was told it was there's issues. we're working on them.
Okay.
But it was supposed to be, I guess, noon today, and so apparently there was some miscommunication or something.
Okay, it was supposed to start at noon?
No, I guess you were supposed to wrap up at noon.
Oh no. Okay.
Yeah, I know. So yeah, just make sure, as you wrap up or whatever, to get your contact information, everything in
Okay,
your
well, how about I run through these really fast and try to
do
get
it.
closer
Do
here.
it. We appreciate
Okay,
it.
you
Thank you.
guys.
It's great stuff, by the way.
Oh,
So
thank
I'm
you.
enjoying it. Yeah, thank you.
Yeah, I was told 11:15 start time originally, and then yesterday I was told noon. So I'm like, okay. So
All right, we'll figure it out. We'll figure out
we'll
what
go through
happened.
this fast and try to get you closer to the
Thank you.
time. So the next thing I want you guys to watch for, though, is that momentum shift here. And as we go forward, you're going to see a repetition of that. So this is the same type of setup here as a year earlier. So you get that Phoenix, it's just a little bit of a different variation of it. Now, if we go forward a little bit further here, again, same Phoenix setup, but this one has that two-wave correction. So watch for those shifts in that momentum. The Phoenix and the 2B are my favorite strategies. So you're seeing a whole bunch of them over the course of the past year on this slide. Now, the next tool that you can use to help you with your timing is a fib fan. So if we're looking at that first, here's the 2B. If you're looking at that first correction, as long as this impulse move is average, you can take a fib fan from this low to this high, and that's going to give you a target point for looking for a new entry. So if you are on NinjaTrader, ToniHansen.com/trade tracker will get you the fib fans to put on your charts. And I'll go through this here a little bit more quickly here. So here's an example again from about a week or so ago where we have that fib fan from the low to the high. That's providing us the 76.4% as a support level. And this is what we want to use for going ahead and entering our positions like the Phoenix. So here is from this morning on the Russell. Notice that this move is extreme. So we have an extreme impulse move. So since this goes and puts in a second high, we would pull that fib fan over to the second high, and then that gives us the new entry trigger. Look at the zone here this morning. This is the same rounding off that we want to see with that momentum shifting. And then the channel shifts here. And this provides the Phoenix this morning. So here again, same setup, but this shows you how I used that fib fan as my support level. And looking at comparable size of corrections also gave me a continuation on this. Again, these are all my live trades, you guys. So here's kind of putting everything together from that momentum shift. This is what we call a steep 2B. We don't have like the really clear cut 2 wave here. Goes into the Phoenix and then the reversal from there. So getting through the rest of that really, really fast, here is where you can learn more with me, you guys. So I've been teaching almost as long as I've been trading because I started out with just an online blog where I was sharing what I was trading and why and what I was looking at. So the class that I want to introduce here to you guys is growth mindset trading. And it goes into conquering the emotional aspects of trading and then also delves into those building blocks of my trading strategy and how you can walk step by step from the template to what you look for first, second, third, fourth, target placement, stop placement. It shows you everything on one of my favorite strategies. So if you want to take a look at that, it is a 5-day program that is now available on demand for $100, and you're going to learn a lot. You can see we had to go through a lot of material in the last half an hour, but you're going to learn a lot more when you have 5 days of material under your belt. So thank you again for having me here today. And I'm sorry about the miscommunication here this morning. And I do look forward to joining you again in the future. Yes, that is for 5 days.
Thank you, Toni.
Thank you, everyone.
Yeah, we really appreciate it. Great information on pivots. Ladies and gentlemen, if you are feeling overwhelmed and wish you had a professional trader who can help walk you through getting started as a trader, here's your chance. With over 20 years of full-time trading under her belt, Toni Hansen will hold your hand and guide you through the process of building a profitable trading strategy. We've put, well, Toni, if you'd like, put your link in the chat box now.
Sure, we'll do that here quick. And then you guys see all of that.
And I want to thank you for making such a generous offer to our audience today, and we hope you will come back and join us Traders Corner again. Traders, I mentioned at the top of the show that we had a great lineup today, and we are going to keep the ball rolling. Our next presenter is the CEO and founder of TradeSmart. He graduated from the University College of London and is a professional trader and trading coach with over 15 years of trading experience. He has a passion for trading and loves to train and coach others. Here to present live market analysis using supply and demand is Mr. Simon Klein. I'm really looking forward to this. Welcome to Traders Corner, Simon.
Okay, can you hear me?
Yes, yeah, we can hear you.
Anthony, thank you. Thanks for the introduction. Okay, you can see the screen as well. We're good.
Yes, yeah, we got your screen up.
Okay, I guess I have 45 minutes from now, so we're running about 10 minutes late. Yeah, that's fine.
Yes, yeah.
Is that fine, or do I need to finish at 1:45?
No, give yourself 45 minutes as well. And is that the City College of London, University College of London? Which one is that?
It's part of University of London.
Okay.
University College of London, that's the name of it.
Okay. I think I studied a little bit at the City College of London, which was downtown.
No, it's a different. This is near Euston Station, if you're familiar with London.
Yeah, been in that station many times. All right, I had to ask that.
Not far from Euston.
I don't mean to interrupt you. Yeah.
No problem. Okay, how do I see? Let me just see if you type something in the chat area. It's the questions there. I just want to make sure I've got everything that I can.
Yeah, if there's questions, you could just answer. It would be on the left side there, where you have like you got the orange and the green. If there's questions, there will be a question box underneath that far left.
I see a question. If someone just types something in there now, I see the last one at 6:00. Is that right? Let me just see if I put the right time. 1 second. Yeah.
It'll shine like red or something if there's a new question.
I've got the chat as well. I'm just putting it all out. 1 sec. Oh, got the chat and this. Okay. All right. I think I've got everything sorted and we're ready to go.
All right. Excellent.
Okay, hi everyone, and welcome to live market analysis using supply and demand. Now, this is what we're going to cover during this session. And ask the very important question to ask is, why am I always wrong? Doesn't that seem to be what happens to especially beginning traders? You seem to enter a trade and it immediately goes against you. I'm going to stop to introduce you to professional chart reading. And again, you won't find this in any book. This is based on experience in the markets and learning from what the markets teach you as opposed to what you learn in a book. It's from practical experience in the markets. And I'm going to share with you also a framework when we go over the practical chart reading to give you a framework in which you can read any market. Doesn't matter what the market is, what time frame, you'll be able to read any market and understand what's going on. I'm going to give you an introduction to supply and demand. Again, it's a bit different to, again, what you'll find in the books. And then we're going to take what we learned to the live markets, to the current markets today. And we'll primarily look at the Forex markets. We can look at some stocks as well. And again, think about some markets that you may want me to look at. Maybe we'll look at Bitcoin futures and maybe some commodities like gold. Gold's very interesting at the moment. And then what I'll do is I'll open up for audience questions and answers at the end and share with you how to take the next step. Okay, so that's what we're going to cover. Quick disclaimer, you can read that. And here's a picture of me giving a live presentation in person at the New York Traders Expo. And I was also invited to speak in China at the Bogo Investment Forum. And you may know some traders over here. I spoke with ministers of finance, and you may know the Jack Schwag over here, the market wizards. If any of you have read any of his books, definitely worth reading. And yes, again, is a little bit more about me. You can read that. TradeSmart is a trading education business, and we primarily focus on teaching you how to read the market professionally and how to run a successful trading business, including how to develop your own trading plan and strategies which fit your personality and lifestyle. You can see I started my professional life at Credit Suisse in London and New York, and you can read that. So let's go into the first problem. Why am I always wrong? So you may have learned something about trend and maybe use moving averages. I don't, but I did at one point in time. And you may have a look over here and you say, oh, okay, the market's going up, it's in an uptrend. So you put on your first trade over here, and then the market goes a little bit in your favor and you think, great. And then all of a sudden it starts to move against you, and you're looking in disbelief as you watch your P&L go into negative territory and get bigger and bigger until you no longer can take the size of the negative. You didn't put a stop in because you thought this trade was going to work. It's in an uptrend, it's going to keep going, and you close your first trade for a loss. Now, like most beginning traders, you think, I want to make that money back. The market just took that money away from me. So you double up and you say, well, the market's going down, and you take another trade on the short side here on selling, thinking I'm going to make this back. You take a bigger position because you want to make it back quicker. So the market starts to move in your favor, and you start to see you're making some of that money back, and all of a sudden it turns around and you end up with your second losing trade. Now what happens is you are wanting to make that money back again. Sometimes you can call that revenge trading. I want to make that money back. The money that the market took that from me, I'm going to get it back. Definitely not the right way to think, but that's how many traders think, at least at the beginning. And you take your third trade over here saying, well, it's definitely going up. And then you take your third losing trade. This time you've dug quite a big hole in your account, and this is just one day of trading. And you're thinking, what am I going to do now? So you take a step back and you say, well, there's a pattern here. I seem to be buying up here and selling down here. Every time it goes up to this level, it comes down. So I'm going to go all out. I'm going to make all that money back. Instead of buying up here, I'm going to sell. So you take your fourth trade over here on the sell side, expecting it to go down. And what happens? The market continues to the upside this time. You throw your hands up in the air, take your fourth losing trade. You've wiped out your account, and what usually happens is you come back the next day and you do the same thing again. And you're like, what is going on here? Why can't I make money trading? It can't be that difficult. It's just the price goes up or down. That's it. Can't really do anything else. Very simple, but not so simple. So why is this important? Because when I first started learning how to trade, I worked on a professional floor, and I was taught by two very good traders who were up anywhere between $2,000 and $10,000 in the first, we traded the New York Stock Exchange, the first like half an hour of the trading day. Anywhere between that and up of that, sometimes even $20,000. It depends, but they were up consistently almost every single day. So during the trading day, I used to call out a stock, and I used to go, I'm going long, say IBM. And I used to walk past their screens, And I used to see that they would just take a short without even looking at anything. Whatever I would say to do, they would take the opposite side of the trade. And at least that was at the beginning. So you need to ask yourself, am I always on the wrong side of the market? And you need to ask yourself, why? What do I need to learn from that? So one thing that you need to learn is about what I call supply and demand. These are zones. You need to know when the market is likely going to turn or when it's going to break through. Okay, so let's get into professional chart reading. So how do you do this? Now, with any subject, I believe you need to learn the foundations. So in order to become a professional trader, or even, become proficient as a trader, and you're using charts to trade, you're a technical trader, then you need to have a framework for reading the market. Now, what most people do is approach trading from the strategy side of things. That's like approaching driving from learning how to drive a car without understanding how to drive a car on a road. So I know how to control the car, but I don't know how to drive safely on the road. You need both. You need to understand road conditions when you're driving, and you need to understand how to control the car. So understanding road conditions is similar to understanding how to read the market. Understanding how to drive the car and when to drive the car, when to, and how to drive it under certain road conditions is like the strategy part of trading. So you need to know when to apply your strategy under the correct market conditions, not in a vacuum. So this was basically my development as a trader. I started learning the specialist system of trading on the New York Stock Exchange. And this is where we were taught how to spot what the specialist was doing, who was the ultimate market maker. And if we could spot what they were doing, looking at the time and sales and tape, then we could make money consistently trading. And there were lots of different tricks and things to be able to spot what the specialist was doing. And that's how I was taught to trade originally. But the problem was when the New York Stock Exchange went hybrid, part computer and part human, the system that I had learned to trade no longer worked. So it was back to the drawing board, and I had to come up with a way of trading, which took me quite a number of years, that was timeless, wouldn't be disrupted by technology, which is what we call disruption, which is what happened to my trading. Basically, the trading floor that I was working on closed down, and I went to work for another trading firm, a hedge fund, and various other prop firms, because the way I was taught to trade originally didn't stand the test of time. Now, wouldn't it be a good idea to learn something that you'd never have to learn anything else again, and it would work now until the end of time? So this is what I'm going to share with you now, at least the outline of what you need to be able to read any market. So these are the things what you need. You need to understand pivot analysis. That's my way of, it's a way of reading the trend based on price action, based on candlestick charts. And I'm going to share with you how you can do some training at the end to be able to get the complete picture of how to use the pivot analysis to understand what trend the market's in. And I'm going to show you that in the live markets as well. Once you know what the trend is, then the next thing you need to know is supply and demand. Where does price move from and to, and when are those levels likely to break, like what we looked at before this? Then what you need to know is, when you look at a market, what direction is the market going in? Is the market currently going up or down? Isn't that a good thing to know? And we can do that very quickly within seconds of looking at any time frame. I can tell you which direction the market's going in. I'm going to show you some examples of that as well. Each one of these by themselves would give you a very good reading on the market. Put them into multiple time frames across, that's understanding where you are in the maze by looking from a bird's eye view, from like a helicopter down at the maze, so you can see what the bigger picture is, so you don't get stuck in the maze, so you can see the bigger picture. That's the multiple time frame analysis. You have to understand the context in which you're trading in. So you need to be able to look at the bigger picture. Each one of these by themselves will give you a great reading of the market. Now remember, if you take a table and you put one leg on it, it may wobble over. If you put two legs on it, it may also wobble over. 3 is when it gets stability. So if you have a 3-prong approach and you're coming at the markets from 3 different angles, it's solid. And you do that in multiple time frames, you can get a very good reading of what the market's doing. Now, the beauty of this is you don't need any guru or anyone to teach you any strategy once you've got this, because if you come down here, the charts will teach you all you need to know once you have a framework for reading them. Everyone sees different things when you look at the markets. So if you have a framework for reading them, then you can start to look at the markets and see the setups or see what happens time and time again, and start to be able to develop your own strategy for how to trade that scenario. But within the framework of reading the market, just like if you become an architect, for example, you have to learn the foundations of architecture, which may involve understanding physics and engineering. But once you've got the basics, every architect expresses themselves in a different way. It's not a one size fits all. And the problem that I find very much in the trading world is that because I do it a certain way doesn't mean that you'll be able to do it that same way unless you have the same fit as me, much like having a tailor-made suit. But once you understand how to make a tailor-made suit, then you can make it any size. It's not a one size fits all. It's I understand the framework, I can make it any size. So you can come up with a way of trading that will fit your personality and lifestyle much better than trying to fit into someone else's shoes. If that makes sense. Just type a yes in the chat area if you get that. Okay, so let's go back to basics. And this is why basically it was so important to come up with a framework of reading the market. So let's go back to basics. Everyone knows this is a hammer and shooting star. Now, if I were to ask you a question, let's focus on this bar. Is this candlestick bullish or bearish? You can type it in the chat area. And I asked this to those floor of traders that you saw at the New York Traders Expo in person. And almost everyone put their hand up and say this is bearish. Now, let's explore this a bit. Here is that bar in the charts here. This is the dollar Swiss. And we have a multiple move up and we have a bar like this. Okay, now what happens to the market afterwards? And let's see what happens next. So the question is this bar bearish? Well, maybe it's bullish. Now let's have a look and see what happens. So basically this bar is not bearish at all. Most people, when they see that, including myself originally, think it's going down. But what did the market do? It did this. Now let's go back to our three-prong approach and ask three questions so we can understand what the market's doing. Now, let's go through this. In terms of trend, in terms of the pivot analysis, here we have a higher low. When we get up to here, we've made a higher high. So the pivots are moving from a trend perspective up. So there's 1 point to the upside. Now let's have a look from a supply-demand perspective. These are zones of supply and demand on the market. Now, people always ask me, where'd you get them from? Is it an indicator? No, I put them on myself. And if you come to my trading room, I'll show you how to do that. And we do that almost every day in the markets. And I'll show you also in the live market shortly. So what happened over here is this bar cleared above a supply area, meaning that the next area above is here and here. So are we going up or down? We just cleared through like a barricade or a barrier, and we just broke through it. So which way are we going, higher or lower? Well, guess what? Higher. And let's look at the final thing is price direction. The direction changed to the upside here, and the direction's still up here and still up afterwards. We are pointing to the upside. So we asked three questions now, and we're only looking at one time frame. So according to trend, which way am I going? Going to the upside. According to supply and demand, where am I going? Well, I've just broken through a supply area, so I'm going to the next level. And direction is up. So I've got no reason to sell, and the market tells me I'm going higher. Now, the beauty of having a three-prong approach is there's always a majority. So you can get a pretty accurate on which way the market's likely to go based on, by asking three questions. So let's go now into supply and demand. What is supply and demand? So, and again, this is building your trading on sound principles. Prices will always move higher when there's more demand than supply, and lower when there's more supply than demand, and sideways when we have an equilibrium between supply and demand. So ask yourself a question: what moves markets? What moves markets? Well, could be the news. It could be, could be anything. Could be what's going on, geopolitical situation in the world. But ultimately what moves the market is supply and demand, which is if there's more willing buyers and sellers at any certain price level, prices will go higher. The reason what causes the imbalance is that could be anything. And again, what you usually find in the news is they report what the market did afterwards, and whatever was going on in the news at the time, that's the reason why. Well, that's great. Tell me afterwards what the market went up today because of whatever's in the news. The market went down today because there was some disaster, COVID. Ooh, market went down. Yeah, they tell you afterwards. Market went down because of COVID. Market went up because of this. Market went. That's very good after the fact, but you need to make decisions before the market's played out. So the beauty of this is supply and demand will never change. Once you understand how to view the market from a supply and demand perspective, and also using the trend, and which is also a type of understanding of supply and demand, because prices will always move higher after pullbacks when there's more demand than supply. It pulls back and then goes higher than what it was before. And then it comes down and goes higher, and sometimes goes sideways and then goes higher. So your job now is to identify where is supply and demand on the chart, because then you know where prices are going to move from and to. And if you're in a bullish market, wouldn't it be a good idea to wait for prices to come down to a demand area? Or if you're in a sideways market, you could go either way. But it's a higher probability to buy demand in an upward moving market than it is to sell supply. That's understanding context. So you have to understand before you take a trade what your expectancy is on that trade, and based on what you're reading of the market. If you can do that and base your trading on aligning yourself with what the market's doing as opposed to trading a strategy, you're going to be trading much better, because if you focus just on the strategy, your strategy is not aligned to the market, and you're going to have to adjust it according to different market conditions, as opposed to coming to trading from a market perspective, from reading the market and then trading what you're reading, what's happening. Much better to do it. Then you're aligned with the market as opposed to trying to force the market to align with you. Does that make sense? Again, that's a little deep maybe for people who are new, but start that way. Start with the market first, read the market and then trade the market, as opposed to start with a strategy and force it on the market. So supply and demand, very simple. You want to look for areas where the market turns. And it's not just any area. They're what I call significant areas of supply and demand, significant turning points. So these are zones of demand where there's more willing buy orders sitting down here than sellers. There's unfilled orders, and likewise on the supply side where markets turn. So if the market moved up here, you must know there must have been more demand than supply at this level. So there's likely orders sitting here. So the market will likely go back to that area. Much like when you do business, you want to travel to an area or to a person, to a client that there's business to be done with. So the market will move to where there's orders, because that's where business is going to be done. Don't think of the market like anything else. The market's just a marketplace for business between buyers and sellers. And the market will move to where those buyers and sellers, otherwise no business will take place. Does that make sense? So markets will have to move. Once you identify where there's large supply or large demand, the market inevitably has to move to those levels at some point. So your job is to identify high probability turning points in the market. I'm going to share with you how to start to do that. And the caveat is it is recommended that you go through our training, but it depends how you learn. I'm going to share with you how you can do that towards the end of this presentation, so that you can actually see what you learn put into practice on a daily basis quite accurately. Now, let's go into it and let's jump straight into the live market. Now, who's ready to jump into the live market? I'm going to show you some examples from today. So let's jump into this is gold. That's gold futures. And so at the beginning of today, we were down here. Okay, this is an area where prices moved up from down here. We could probably mark it out like this if you wish. Okay, now look what happened today. We moved down into this area. And if we go down to a smaller time frame, onto an hourly chart, you're watching this. And you're watching for the market to break out of this area. And so at this point, and it has to be timed right, at 2 o'clock, 2 a.m. Eastern time, which is the start of the European session, the market changes direction here to the upside and takes out all these highs. You can see that here, all these highs. And the direction reverses from down to up. And it's still up right at this moment in time. So we're pointing to the upside. We've been pointing up all day. From a direction perspective, the price is going higher. Where's it going to? Well, you can go up a time frame and you mark out a supply zone, which is here. It's going to this area, from here to here. And well, why are we starting to turn now? Because we just hit supply. What's happening to the market? Starting to turn. See that? So from here to here, that was a trade for today. And how do you get into such a trade? Well, you buy pullbacks. So you can look on a 5-minute, you can do it on a 15-minute. If you miss the first move, you buy a pullback. You wait for the market to pull back and you get in, and then you can manage risk. Wait for it to come down, pull back, pivot, get in. Until you get closer. Obviously, the closer you get to the supply area, the lower the probability and the less distance you have to move. So you want to get in earlier on. And again, if you get in earlier on, you can add to your trade as you start to move to the upside. Now, what's very interesting about this market is this area, there's a big possibility here. If you look at what's happening, you see the tails there, and we've got what we call a tradable void. This is gold at new highs. And we look how we came off these areas every time. And we've look how we started at the end of last year, how we bounced off this area and then continued to the upside. What I'm seeing now in the market is if it stays below this area and comes back down, there's a possibility, look at the weekly chart, that we break here and then we've got a tradable void to the downside, at least maybe into here, if we can be more conservative and mark this area. So we could, if we break, and you can see the highs going lower here, this could potentially break down. And we're coming towards the end of the week and the month. The line in the sand will be the top of the previous week. If we close here, there is a possibility we take out this high, and then that's going to change something. So you need to understand how to read the market with what's happening right now and what the probabilities are going forward. Let's look at a few other markets. Okay, so this is the dollar index, and here's very interesting on the monthly chart. Now, we had a move up here. This is a demand area. Now, look what happens. The market came back down and turned. And here we put in a higher low and a higher high, and we pulled back to demand. So the odds this month is the dollars. We said in our trading room almost every single day of this month, the dollar's going up. Yeah. So we come down to a smaller time frame. You can look on the weekly chart, and you can see the dollar's gone up every week until we get to the top of where we came down from over here on the weekly chart. And if we look on the daily chart, you can see the trend is up. Every time we go down, we push up higher, go down, push up higher, go down, push up higher, go down today, push up higher until we don't. Now it's a bit trickier today because we're into this area, but I think the odds are here that we've got a possibility of taking out the high of last month. If we do, we're likely to take this high and then we run up again. So I spoke at the Boga Investment Forum way back down here, and I said, this is probably the bottom of the dollar for, well, for that year, and it happens to be the bottom of the dollar for a long time, and confirmed when the dollar came back down and turned here, giving you an entry on the long side. And look at this move. This may do the same thing and run up back up to this area again, unless we take out these lows. So again, you have to know what you're looking at, and the market, and you have to evaluate the market step by step. It's much like a chess game. You have to think a few moves ahead of what the market is, where it is now, and where could it go based on what it's doing, and be able to evaluate that in real time. Yeah, you don't know anything for certain, you know what the probabilities are. So the probabilities today when the market came down to, look at this level, we're going to bounce. So you saw today the market's been going down, yeah, but it turned around when it hit this level over here. See that? And you can see that on the smaller time frames. You can see how the market turns. Direction turns back to the upside here. Now, let me show you a few other markets. Look at the Great British Pound. And again, from today, we can do the same thing. This is today. So here, we were kind of on the short side yesterday. And today, we hit demand and turned around during the Asian session. But later on, we set up a demand area. Look at what happened. The market came down here. And where did it trade to? Look at where it stops, right in this level, and gets knocked back down. See that? So this is where you want to be taking profit up into this area. And you can see how that works. You don't want to be buying up here. You want to be buying down here and selling up there. And we can do this across any time frame. I'll show you another interesting market at the moment, which is the yen futures. Now, the yen futures is right almost at all-time lows. And we've read this market beautifully. Now, 2 weeks ago, the market gapped up and we said the market's going down. It gaps up. This is what I call a novice gap. It gaps right into the supply area in a downward moving market. So isn't that the best place to sell? Well, look at that, what happened. And we do get spikes up in downward moving markets like we did here, back to where we broke out from. And you can judge by this move down how far it goes, whether it's going to catch. It tried to catch here and turn, but failed. Once we go back down more than 50% of this bar, the odds are we're going lower. So this is not a buy. This is, you can see, a sell. So we said, don't buy this, sell. So you have to understand how to read the market and what you should be doing. And you can see we had this week a move back up, which is also a sell right up to an area. Look at the lines that we've drawn on. Exactly. Look at where the market bounced from and to, and where it came down. Look at where it bounced to. Look at where it tried to hold the lows, but this is not demand. This is not demand. This is not an area you want to particularly buy, apart from the fact that it's the low. There's no other reason to buy that. This move up never took out any one on the other side. It never took out a pivot in the opposite direction. So this one broke down below here. So this is why this move up this week is sellable. So we had a move up, you see earlier on this week. Let's look at it here. And if we look at this, look at what happened on Monday. We spiked up and look at where we stopped. And I took advantage. I actually took this trade by shorting the dollar yen and taking it to the downside as a spike to the upside. And that I posted, I mean, we took it in the trading room. I talked about it in the trading room. I think I took it earlier. Then we started our trading room and went through this trade as well. So looking for the spike up and then continuation down. Now we're at the lows, so we could have another spike up, but the odds are we're going lower. This market is most likely going to break the lows. And depending on how it breaks the lows, will tell us what's likely to happen next. Over here, we broke the lows and the market came back up. You see that? It came back up. So you have to, whereas over here, it broke the lows and went down. So you have to understand how to read what's happening so you understand what's likely to happen next. Okay, so I think I have about 15 minutes left. So let's go through a few more markets and let's look at Bitcoin, and we'll look at Bitcoin futures. And again, this works across any market, any time frame, whatever you want. So if we look at the weekly chart here, and we can look at where the market came. This is an area, again, these are drawn ahead of time. This is what we have. When the market's down here, how do I know where we're going? Market turns up, and it needs to take out this area to take out the highs. So the market comes up, and look, this is not where you want to be on the buy side, at least not initially. So you see, we try again, and then the market turns and comes down. Where's it going down to? Somewhere in this area. This is where we are now. Why is it going back up? Because this is demand. Now, if we go down to a lower time frame, you can see where this is on the daily chart. Why don't you want to be a seller here? Well, at least not initially. It may break it, but this is not the place. This is where you want to take your profits, at least short term. And you can see how the market kind of bounces from this area. And again, all these levels we know ahead of time. Again, this was a level to buy at on a pullback when we called this out, and almost every single turn of this market down here as well. If you remember way back when, this was a buy area down here when it was around the $5,000 mark. And then, and then also understanding this is where you want to sell this move up and where's it going down to, and when to get back in on the long side again. And this is a bit tricky at the moment. We'll know more when the market closes. If we take out this low, the market's likely going back down. Okay, so if we take out these lows, the market will likely go back down to the 50,000 area, and if it goes any lower than that, down to 40,000. And it, if it's going to go higher afterwards, it shouldn't go below this area. I mean, we could easily go back down there. If we hold this area, we're most likely going to go back and take out the highs. It may, at the moment, we're kind of sideways. You can see that sideways price action. Right, let's go through one more market, and then we'll I'll share with you. Let's have a look at the E-minis. Now, again, this is an area over here. Look at the market pulled back to, this is demand over here, and we've got to readjusted the level now to this one, but originally it was around this one. Down here was a buy. And you can see over here, we're taking out the highs. Market's very bullish, but at the highs, and you always have to be careful when the market's at the highs, especially when it accelerates to the upside. At the moment, we're kind of consolidating at the highs. Let's actually quickly look at the NASDAQ. Yeah, you might see some indicator. I've always had this, I mean, I don't really use any indicators, but I've kept this on because I got used to looking at charts like this. I do use this for one form of base trading on the smaller time frames, the time entries, but that's about it. Almost not. 99.9% of the time, I don't use no indicators, just price action. So, and again, you can see very similar on this chart as well. This bar, we've gone through this. How do I know that this pullback's finishing? So I know it doesn't look like that to many people, but this is a bullish bar. Remember what we said right at the beginning. This is a bullish bar, and I'm now thinking buy. That's the end of the down move. I'm thinking buy, and you're thinking, oh, this is a bearish bar. No, this is a bullish bar, just like we did right at the beginning. When I see this, and those of you in my trading room, I said, this is the end of the market. We're going up. I'm going to take out the highs. Look what happens next. Look what happens the next monthly bar straight up, and look what happens after this. And the rest is history. And you can see the market now, this month, made new highs. But if you see it on this bar, and most people don't see that, and we understand asking those three questions, why? Price direction up, cleared above supply, we've changed trends, we're moving up. Got to deal with this area, but this is the end of the pullback and the beginning of the continuation to the new highs. And we've seen this time and time again, how to understand when the pullback's over and when you should engage it. And we see even on the smaller timeframes how these levels work. This came into this drop on the other side of it and turned up. It's going to be a bit tricky at the highs now, but the market is still bullish, but it has got room to drop if it wants. Okay, let me share with you now a trader success story. I think Jane's actually here live. And so Jane came to me, it was about a number of years ago, and listen to this carefully. Beginner to consistent profits in 3 months. You're thinking, wow, well, she had no prior trading experience, and she learned the principles of trading, how to read a market, how to run a trading business, and came to my trading room, went through the training of how to read the trend, which I'm going to share with you exactly the training that she did, that you can actually do exactly the same yourself. She went through that training. It's about an hour and a half. She went through it 50 times. Yeah, to really understand. She didn't know what candlesticks were or anything like that. And this is what she said about the training. All I can say to anyone who wants to consistently profit, just do it. That training turned my whole trading around. From that day on, my trading has been so consistent. It's really mind-blowing. Once you understand the levels and can read the trend, you will beat the market every single day. However, the key is follow the pivot analysis, use the demand and supply levels, and adapt it to your own trading style. Be very disciplined. Don't be greedy. Stop when you've made your daily profit, and you will turn losing trades into winning consistently day in, day out. Simon's training can be adapted to any market. I mainly trade NQ. I use my own strategy based on Simon's education. I found the best thing was knowing what you were doing gives you confidence in your trades, and the fear of losing was gone. Trading has become a lifestyle, no longer a binary gamble or nervous hope job. Believe me, it's best and only training to succeed with. She is now training traders to trade NQ at the cash open. So that's the next kind of generation of traders based on the way that she trades, based on the foundation that she learned from me. So she's developed way beyond that now and trades NQ consistently, and now has students of her that are trading successfully. Norman, having been duped in the past to purchase useless courses, I'd been reluctant to take the plunge, but having seen Jane trade and indeed having spoken with you, I was satisfied that I was dealing with genuine people and not the charlatans who dominate the online educational space. I was not disappointed. The course was far and away the best online trading education I have experienced. My congratulations to you both on the course and your sincere efforts to advance your members' trading skills. So the best investment you can make in life is in yourself. As Jim Rohn says, for things to change, you have to change. For things to get better, you have to get better. But you've got to let your knowledge lead to action. Now you've seen a simple and powerful approach to reading the market. I'm going to share with you an offer I put together to help you know exactly what you need to do to achieve mastery of the trend, and you can actually come and see it used in the live market, in the live trading room every day. So take it a step further and learn how to read the trend using pivot analysis. And these are the benefits of knowing how to read the trend. You'll trade in the direction of the trend. The trend is your friend until the bend in the end. Know when the trend begins and ends, and make sure you're never fighting the trend. Make sure you're on the right side of the market, and it will help you develop a profitable trading strategy or enhance an existing trading strategy. So here's my offer to you. And maybe I'll put it into the chat area. Let me put it here. See, type audience. So you can click on that when we get there, but this is what you're going to learn. You're going to learn how to identify the current trend of the market, to analyze the trend in multiple time frames, exactly when a trend begins and ends, and how this knowledge will dramatically affect your bottom line. We use the trend to pick market tops and bottoms, and we do it very consistently. You'll be able to watch us analyze and trade the live markets in real time. And here's what people are saying. Simon, this is phenomenal. I've been trading, studying for 3 years. Sadly, it's been the wrong process. I've wasted tons of money, time, and effort. I've actively deleted all of those programs, indicators, etc., and now completely focus on what I've learned from your program. It's the only real way to trade, and it makes complete sense. He's now a consistently profitable trader, not only trading the Forex market, but also trading NQ with Jane. Tom, I wanted to say that what you teach in how to read the trend training course is brilliant. Before that, I'd picked up bits and pieces from different traders, but it was never joined up. Your course brought it all together in a very structured and algorithmic way. No guessing needed. The facts jump off the chart. Matt, the trading room is very helpful in understanding how to go through the process. I've been trading for 11 years and I've not seen anything like what you do. Love how simple it is. I mainly trade options with trades that last 30 to 60 days. I've been looking for something that I could use to day trade for 2 years now. I want to round out what I'm doing with another source of profits. I have not been able to find anything I could execute consistently. Just paper trading with your system. I've been doing it for a couple of weeks now, and I've had far better results than anything I have ever tried. So this is what you get. It's about an hour and a half, and the usual price is $497. It's on demand. You can watch it as many times as you want. And you also get personal access to me, where you can ask any questions, but you get 1 month access to the live trading room. It's $497 a month. It's a subscription, but you get 1 month free. And you also get access to our online trading community 24/7 via a Discord server, so you can connect with other traders just like you who are on the journey. Some of them are successful and will be able to help you, and others are on the journey just like you, some further on, some behind. We have, a large number of consistently profitable traders now in our community. And this is what the community looks like on Discord. You can share your charts. So here's the offer. If you join now, the regular price is $994. The deadline's 2 days from now. You're going to receive $497 off. Basically, it's $497, and you get the live training room for a whole month, plus how to read the trend, which is session 1 of how to read the market professionally. So I'm going to show you quickly. This is the link. I posted it in the chat area. For those of you watching the replay, you may see it below, but you can type this into your browser. It's tradesmartforex.com/promo. And what it will do is bring you to this page. I'll show you. It'll bring you to this page, and you can click on buy now. You can read a bit more about it if you wish. And you fill out your details here. Just want to point your attention. It is a monthly subscription, but you can cancel at any time, even immediately if you want, and still get access to the trading room for a whole month. And you will still keep your access to how to read the trend, even if you cancel that. Once you fill out all your details, again, you don't need a PayPal account. You just need to put an email. You can pay via credit card. PayPal is just the payment processing system. And you fill out all this, and then you'll be emailed your login credentials. This is what it looks like on the inside. You get access to how to read the trend, which is session 1. This is what you get access to, this session. And well, that's coming up. Oh, it's here. So this is session 1 of how to read the market professionally. Plus, you also get access to our trading room. And we have the live schedule here and how to access the live trading room. Plus, each session is recorded. If you can't make it live, you can get the recordings. And this is our weekly preparation session, which is a standalone subscription, which you can also get access to as part of this package. So very quickly, how to read the trends, $497. 1 month in the live trading room, $497, a total of $994. Today, $497, that's your investment. Come and see if this is for you. If you already know, then we welcome you. For those of you who joined already, welcome. Come and join our community. And again, I have people in the trading community anywhere from complete beginners to people with 30, 40 years of trading experience. Some of them have not been successful until they started on the program. And they're seeing success for the first time after 30 years of trying almost everything else that didn't work for them. And finally coming to trading from understanding the principles and the foundations of trading, understanding how to read a market, and then developing a strategy, and understanding how to run a trading business and building a trading plan for yourself, putting all that into play, plus watching that being demonstrated in the live trading room on a daily basis. Again, that's the environment, and plus being with other people doing the same thing. So you're on the journey, you're not alone, you're part of a community. Very important in this day and age, to be part of a community that can help each other, and you can share with each other the ups and downs. And yeah, so that's basically what I have to offer. If you have any questions, and you can ask them now, or if we run out of time, you can send me an email to simon@tradesmartforex.com. I want to say a huge thank you to the organizers here for putting this event on. Thank you for all of you for your time, for being here. For those of you who joined, welcome. For those of you who are thinking about joining, take some time, think about it. If this is for you, we're looking forward to welcoming you as part of our trading community and helping you on your trading journey. Thanks a lot, everyone.
Thank you, Simon. Teaching others on how to identify market trends is such an important foundational block, and then being part of a community to share strategies is so critical. Great information. Thank you for joining us today.
Hey, thank you.
Yes, thank you so much, man. Yeah, you're welcome, man. Ladies and gentlemen, that was Mr. Simon Klein of TradeSmart. We have put a special offer in the chat box, and you can always find Simon at TradeSmartForex.com. Thanks again for joining us today, Simon, and we hope to have you back on Traders Corner.
Okay, thank you very much. Thanks, everyone.
Thank you, Simon. I hope everyone is listening closely, because our next presenter is the co-founder of brokerage firm Altavest. He is a graduate of the University of South California, USC, and has held a Series 6 and 63 securities license. While working with a mutual fund and insurance group, he maintains a Series 3 commodities futures license, as well as a Series 65 for registered investment advisors. Here to present, do you want to automatically trade professional option strategies, is Mr. Erik Gebhard of Altavest. Welcome back to Traders Corner, Erik.
Yeah, thank you. Thank you for having me. Good to be here. It's always fun to sit in on the other presentations when I have time as well.
Thank you for being here. We appreciate it.
Well, am I ready to go? Can everyone hear me okay? And see my screen?
Yes, we can see your screen and we can hear you well.
Okay. Well, let's see. Do I need a webcam this time around? Let's see here. I don't know.
No.
Am I gonna scare everyone off or just leave it off here?
It's up to you. I'm not sure if the webcam will work, but you could try if that's what you'd like to do.
No, I don't really have a preference. So that's
Okay.
fine. We'll just go forward, and I guess I have till what, about 10:40ish?
Yes. Not. Oh, you're on the East Coast or the West Coast there.
Or Pacific, yeah.
Yeah. So let's see. We would have you for like 1:40 Eastern Standard because we went 10 minutes over about.
Okay, we'll see what I can do.
Yeah.
I'll get cooking.
All right.
Okay.
Got it.
Thanks everyone for joining me.
You still get your full time though. That's still 45 minutes, just so you.
Okay, very good.
All right. Yeah. All right.
All right, we're going to jump in, everyone. We're going to look at automatically trading professional option strategies, and more specifically, we're going to look at option spreads. We have a proprietary algorithm that we developed over the years based on all of our experience trading tens of millions of contracts, and we don't need to do screen watching, and we can actually use some automation to manage risk and profit. So before we get started, remember we're speculating, and there's always risk when speculating. So do take a moment and look at that risk disclosure. I won't read it all, but if you need to take a screenshot or pause it later, you can, or go back to it. But basically, you should only speculate with risk capital, and there's never a guarantee of basically past performance guaranteeing future results. A little bit about Altavest. That is yours truly there in the middle with some of our trading colleagues on the S&P 500 options pit that does not exist anymore, all been taken over by electronic HFT, machine, algos, you name it. But we've been doing this for about 27 years now, having traded along the way tens of millions of contracts. We created a proprietary strategy called the Dragonfly, and that's part of what we're going to show you today. We're registered with the CFTC and a member of the NFA. We're located in California, and not to spend too much time, there was a brief introduction about me, but I graduated from University of Southern California with my business degree. I have my Series 3 for over 30 years now. Also have a Series, had a Series 6 and 63 securities licenses. Currently have my Series 3 and my 65, which is the investment advisor exam. Allows people to be a registered investment advisor. So with that, why is trading so difficult? Maybe start off with a little humor. Who can make sense of that chart? Maybe some people can, but I can't. So we're not really going to delve into any chart reading. That's not what we're talking about. We're going to look at algorithms and why we have a difficult time competing against algorithms. And really, that's the landscape that we're working with today. That's your competition. It's not other people like us sitting behind a screen. And everything is automated these days. You see the machines moving prices back and forth. You know, look at the closing 20 minutes of the last, yesterday. You know, I mean, that's all machine stuff. I mean, that is pure algo-driven flows. 90% of the stock market, U.S. equity trading volume dominated by systematic trading. So with that in mind, how do we use algos to trade options and do it in a professional manner? Yes, we can do that. We're going to look at trading options like a large institution might do it. For example, an insurance company, you know how they make money, right? You pay the premiums and they assume risk. They essentially sell and manage time. They do insure themselves by hedging or reinsure themselves, and they are consistent and they're patient in their process along the way. And they simply look at probabilities and math and long-term odds that favor them, actuarial statistics, a lot of number crunching going on. So this image here kind of made me laugh. So may the odds be ever in your favor. So that's what we're going to hopefully try to do and emulate how the institutions are trading options. We can collect premium too So premium collection strategies with options, and these are lots of base hits. These are not going to be grand slams by going short options and collecting the premium that other people pay us. We need to be consistent and patient. We need to manage risk because we will have losing trades. You'll manage reward as well. Just as importantly, you're going to need experienced people and the right tools to help you along the way. So that's where we come in here. And again, lots of base hits, as we like to call it, using the baseball analogy. So some short option strategies to collect premium. They can be non-directional, bullish, or bearish, and they target outcomes with a fixed risk. So you know your risk in advance. And those are called credit spreads. And they may be non-directional, and that's part of what we're going to focus on as well. Everyone always talks about, am I bullish or am I bearish? But maybe we're range bound, maybe we're consolidating, maybe there's a lot of chop, and we're going to look at that. But before, we're going to jump into the Greeks, just two of them. If you know options, language and parlance, you know this. If you've not heard of it, it's really simple. I mean, you can go into the multiple derivatives and so forth and deeper order Greeks on options, but we're not going to. This is real simple, folks. Delta, just keep in mind what the delta is. It just represents the how much the option value changes when the underlying asset changes price, but also it's the approximate probability of that option expiring in the money. So that's how we look at it, and that's how options traders use delta. For example, if the delta is 0.25, that means there's a 25% chance that option would expire in the money, but conversely, a 75% chance it expires worthless. And of course, delta is always changing with prices and with time, and it is not the probability of a winning trade, so keep that in mind. Some people mistake it for that. And then there's theta, and that's really just a function of time. In options talk, it signifies how much time has passed. Remember, options always expire. They have limited life. So theta is a negative number. It equals 1 day of time decay. So the premium is 10 points and theta is negative 0.05. The next day, the premium drops to 9.95, and then after that, 9.90, and so on and so forth, all things remaining equal. Here's what it might look like on a graph. With 9 months of time, you see the value, the percent of the premium of that option, the value of the option drops and drops and drops till it gets to zero, of course. Excuse me, of course. Now, Wall Street pros and institutions trade multi-leg option spreads to collect premium. And we're going to look at this quote here from a CNBC presentation. An option spread is buying and selling different contracts, a very common way for investors to hedge risk and volatility. It's cheaper because you can offset your cost by the proceeds from different contracts. And it's used by Wall Street professionals for decades. And she's absolutely right. And we're going to look at that in just a minute, a little bit deeper. But we're going to use automation to collect this option premium and create these spreads, bullish, bearish, and non-directional. And here's just one very simple basic example on an E-mini S&P 500 call spread. And we'll tell you a little bit later why we chose the E-mini S&P 500. So here you might be bearish or moderately bullish, or maybe you have no real position or conviction at all. And this is what a trade might look like. You sell this out of the money call spread and you collect the premium, in this case $112.50, and you put that in your pocket, minus commissions, of course. And you're hoping the market basically stays below this threshold here with this red call that you sold. And then here's an example of a put spread, just the opposite. We won't go into all the details here, but here's the market price, and you sell this out of the money put spread, and you have this wide margin of error where you get to basically keep the premium you received for selling that put spread. These are not naked positions. They're all hedged. Your maximum risk is capped. These are called covered spreads. No naked trading allowed, folks. I don't know, I kind of like that picture, so I just leave it in there. Looks like an alien, so it makes me chuckle. Anyway, so again, no unlimited risk, no margin calls. That's the advantage to doing covered spreads. So we're only talking about covered spreads, no margin calls. That's a big risk too. Looks like this woman here is looking at her husband's phone, reading a text, asking him why margin keeps calling you. So you do not want margin calls, and the way we're doing it, you won't end up with that situation. And here's a condor. It's called an iron condor. It's a non-directional strategy, and it's just a combination of the put and the call spread that we just saw. And here's what it might look like. We'll slow down a little bit on this one. Here's a 56.40 call that you sell, and you simultaneously buy a 56.60 call. Got the strikes here. Then same structure with the puts. You sell the 48.50 put, that's the red line, and you buy a 48.30 put as hedge, and that's the blue line. And the net result is you collect net premium on both sides, on the call and the put, and then you look for the market to stay between that wide range. And here's the expiration date in this example here. And remember, every short option, there's a long option with a covered spread. And then why is this a worthwhile consideration? Well, we talked about theta decay briefly. And here's what happens in this example. The idea is you intend to buy the spread back, in this case, at this point here, where this blue arrow is, here and here. And I'll show you how this works in our Theta Trader software. But you sell it for a certain price, maybe you sell it and collect 2 points, and then maybe you buy it back for 20 cents or 30 cents or something like that. So you're looking to sell high and buy it back lower. And then here's a unique strategy. I briefly mentioned the dragonfly. We created this years ago. It's 6 legs. It's a non-directional variation on the condor. And here's what it looks like. And I won't go into much time because I'm going to jump into the demonstration here. But here's the structure with the calls, and here's the structure with the puts. And you're selling 4 of these calls, and you're buying 3 further out of the money calls and 1 closer to the money. And you have the same setup with the puts. You sell 4 puts, you collect the premium, but you also buy 3 further out of the money and 1 closer to the money as a hedge or to cover those short 4 puts and calls. And you'll notice the one that you buy here is 50 points closer to the money compared to the 4 you've sold, and the same with the calls. You've sold these 4 calls, and the one that you're buying is this one here is also 50 points closer to the money. It changes the risk-reward dynamic tremendously and can be of great benefit in certain market conditions, and we'll show you that in just a second. So here's the dragonfly and what it looks like in this example after theta decay works. So you can see here the market started trading, went down a little bit, but still above the margin of error here on the put side. And then as time went by, you had a signal here to buy back the spread and move on and take your gains and go on to the next trade. So that's the idea with the dragonfly, same with the condor or any credit spread, trying to sell it high and then buy it back lower. Then we're going to look at a couple of unique bullish or bearish strategies too, because we don't just only trade in a non-directional manner. But the question you might have is, how do you even get started with these kind of spreads? What market are you buying or selling? Which strategy do you apply? At what price? In other words, what's your entry timing? How do you manage the risk and the profits? And essentially, you need a tool to help you do that, and that's called Theta Trader. And Theta Trader will pre-build your option spreads for you based on our algorithm. Theta trades are generated every day, and these are professional spread strategies that we talked about for any market condition. And then you have automation with your risk and profit tracking, something called the risk thermal indicator. All right, with that said, it's time to demo. So I am going to switch screens. And if all goes well, you'll see Theta Trader on my screen. All right, you are now looking at Theta Trader, and this is basically divided on your dashboard here. This is just a demo account, by the way, I use for presentation. So anyway, you'll see the top section is Theta Trades. You have open short positions, any open bot or long positions. This is all of your account info that's integrated with your Altavest trading account. And just to clarify, Theta Trader is software that we developed for our Altavest clients. And here's your current quote. So We'll go into some of this a little bit in just a moment, but I want to start off here. You'll see there are bullish strategies that are pre-built, bearish and neutral or non-directional. And we're focusing on these three specific markets: the E-mini S&P 500, the mini NASDAQ 100, and the mini Russell 2000. And the short answer as to why is because that's where all the volume is. So you get really, really tight execution when you have higher volume compared to not. And if you don't trade the E-minis, you might want to consider that, because really that's where so much liquidity and depth is. But with that said, why don't we take a quick look here at a condor for today. And here are all the different theta trades, anywhere from 16 to 65 days till expiration. The algorithm has pre-selected these expirations and these strike prices. And you'll notice this here is your maximum profit potential at expiration. And this is something called your targeted annualized return at expiration. And notice that trades that have a shorter DTE compared to the longer are going to have, of course, a higher annualized return. This is just to compare one condor to another. So don't expect to place that trade and that magically means you can place that trade every 16 days and end up with a 236% return at the end of the year. So just want to clarify that. But we'll go ahead and drill down. Give it just a second here. It's thinking hard, pulling in all the data. So here's this August end of month expiration. And here's what it looks like on a graph. Here's the call spread you're selling and the put spread you're selling. So you've got 820 points, I guess, right? Between the calls and the puts that you're being sold. And here is all the details on this table. We won't spend too much time, but you'll see 65 days till expiration, your settlement value, the premium collected, put risk, call risk, commission, your capital available, cash required, maximum profit potential, targeted return on cash, targeted annualized return. And let's look here real quickly at the deltas. You're selling this put, the 50/80, and the delta is 9.94. So that means there's over a 90% probability based on the delta that this option that you're selling to someone else will expire out of the money. And then look at the call. The delta is 6.46. So you're looking at over a 93.5% probability that this call you're selling to someone else will also expire out of the money. And you always default to a sell with Theta Trader in this case, because you're selling the condor. I should say when you're selecting the condor as a non-directional strategy, it defaults to a sell. Quantity, it defaults to 1, and you can change it. You can see the numbers changing as to how much you'll need to place the trade or not. You can go up and down. And you notice here, let me do something here. I want to kind of do something. Oh, we just placed the trade. That's okay. I used my thumb here by mistake and clicked it. But I was just going to point out the cash required is $916, the profit potential of $84. And people ask, well, why am I putting up so much money compared to my profit potential? And the answer is simply in the math and the probabilities in those deltas. Because there's, according to the math, it says there's a high likelihood that those options will expire out of the money to somebody else, and you'll be able to keep the premium, or at least most of it. All right, so that's one of the examples there. And let me show you something else here. Let me refresh my screen. But that's how simple it is here to place the trade. Let me just do a quick refresh on the dashboard. So just to review what I did, I just clicked the Iron Condor. It pulled up this this particular trade at the August end of month expiration. And then you notice $916 per one condor. If you go to 2 condors, it goes up and down, of course, according to your quantity. And then you just place the order, and that's what we did. So we'll go ahead and look at a dragonfly. We'll look at the August end of month dragonfly. The dragonfly would be near impossible to create on your own without the help of these algos. There's too many moving parts and pieces. So here's what it looks like here. This is the call side of the dragon and the put side, and it's already built the trade for you. And you'll notice here the call that you buy is 50 points closer to the money than these 4 you're selling, and the same with the puts. And you'll see here the same type of data, but of course it's a dragonfly, and that means you're selling 4 puts and 4 calls, not just 1 put and 1 call. So a quantity of 1 dragonfly is 4 puts and 4 calls. You'll notice the delta 9.9 and 6.4. So again, over 90% and 93.5% probability that these puts and calls that are being sold will expire out of the money. And you can raise the quantity here to 2, go back to 1, whatever you might want to do. Cash required, maximum profit potential. And your targeted returns on a dragonfly will always be a bit less compared to a condor. And that's because you pay money to buy this call and you pay money to buy this put that are both closer to the money compared to the 4 that you've sold here and here. So that's costing you money. It's basically like buying extra insurance. And I'll tell you, it does pay off though to have that extra insurance, and I'll show you in just a second. But we'll go ahead and do 2 of these and leave the price there at 7.5, and there it just shows up in this demo account like you're filled. So there's also something here called a trade simulator. It's a time machine, is the way I like to phrase it. And let me squeeze this screen down just a second. So what I've done, I selected here April 29, and here's a condor for the June expiration. And we can use these buttons to go backwards and forwards in time and see how this trade might have done. You can go backward, you can go forward, or you can just use the play button. And you'll notice that as each day goes by, this is all green, and that means good. The risk thermal indicator says do nothing. And you can see the P&L on the trade is just barely negative, and that's because theta decay hasn't really worked yet. Turned yellow, a little bit elevated risk. You can see why. It's getting a little closer to the upper boundary a little too quickly. And now the trade's turning profitable. And let's see what happens here. Now it's going negative again because, again, it's moving a little close to the upper boundary. Not enough time has passed yet. Turning yellow again. And then look at this, it's red, and that means too much risk and you need to get out of the trade. So that's your stop loss essentially. The algorithm says get out, and what you can do is you can automate this. So you never have to screen watch. Theta Trader scanning and monitoring your account for you, and you can automate this, and I'll show you how to do that. Now remember, this is the Iron Condor for this particular June. Now, how about the dragonfly on the same day? You place a condor and a dragonfly on the same day, and what would happen? Look at that. You get a blue, and that's a profit-taking signal. So the dragonfly actually matured enough to take profits before the condor did, and that's the benefit of owning this call here. And of course, you own that call, the delta is higher, so it's going to gain in value more rapidly than the 4 that you sold above it. And it actually doesn't decay as quickly because of theta decay. So that's a great benefit of the dragonfly. And again, you can automate this when it turns blue. Whichever comes first, blue or red, you're going to be out of that trade before expiration with the automation. Let's do another one here. I kind of forgot what I came up with today, but let's just see what happens. So everything's good. And there's a blue profit-taking signal with 4 days till expiration. And that's the end of month March. Now let's look at this dragonfly, end of month March dragon. So again, just comparing the dragon to the condor, apples to apples. Now here's a benefit to the dragonfly. So this is March 15. You can see that on your screen. You get a profit-taking signal. But on the condor, you had to wait till March 25 before that trade matured. So you had to wait an extra 10 days to close out the condor before it reached enough profitability and the algorithm said get out. Meanwhile, the Dragonfly matured much more quickly. So that's a big advantage of the Dragonfly at times. And here's something else too. We call it a bear hedge. But for example, if you've got a large portfolio, maybe you don't want to sell some things, you want to just maybe buy a hedge. This is what you could do. Just an illustration, because you could do a bull hedge just as well, but you're essentially selling an out of the money call spread, and you collect the premium, and with that premium, you buy an out of the money put spread. And then here's one from April. The colors are different when you're buying premium, but I just want to run this through and show you. If you sit on this trade till expiration and kind of maintain it as a hedge, then of course it ends up doing very well in this particular example. And if it went sideways on you, you would essentially end up in a position where you might have just no loss or no gain at all, because you can do these sometimes for even money. Now I want to show you real quickly here. Under settings, you go to my account, under settings, and this is how you activate your risk manager. And this is how you activate your profit directive. Just check that box. And now here's a great feature too. If you want to activate your risk manager and want to customize your RTI settings, the red level, the orange level, the purple level here, you can set your RTI settings beyond the default if you want to get out a little bit earlier on trades and not maybe take as large of a loss. But remember, if you do that, you'll probably take losses more often. So that's the pro and the con there. But we allow people to customize that risk manager there if you don't want to use the default settings. Something we do as well called TradeScope, our daily research. That's proprietary and available for our clients only. It's a combination of technical and forward-looking guidance on fundamental analysis. So I want to point that out. We have a daily commentary with a review on what happened in Europe, in Asia, and in the US markets. And then of course, looking ahead as well, what to look for with sometimes economic data and releases and earnings and so forth. And then there's an economic calendar as well. And there's a great help file too under the glossary. And you'll see all the different color coding descriptions here that you'll want to probably look at. And there's also a bunch of videos. So these are all videos here and tutorials on taking a deeper dive into Theta Trader. So that's all available for you there within Theta Trader. There's so much here, but it is very user-friendly and simple. And then just going back to the dashboard, I'll show you one more thing, and then I'll show you really the best feature of all. If you have comments or questions, keep them coming. I just can't get to them right away. All right, here are where you can look at your open positions on your dashboard, but you can also look at your closed positions if you'd like, all in one screen. I'll show you that real quickly. Maybe expand that just a bit. Maybe too much, but you get the idea. So you can see this page here summarized. There's 20 trades, 18 winners, 2 losers, 16 short positions. They were all winners. 4 bought positions, 2 out of 2 winners, losers. And this is not representative of real trading necessarily. This is just me using a demo account and happened to be on a good random streak. But I should point out that it does make sense that your short option positions, you'll have a higher quantity of profitable trades compared to your long or bought option positions. So that sort of does make sense. But you can see here a lot of these placed from April up till now. And then I just allow Theta Trader the automation to exit and close out those positions automatically like you saw. And if you wanted to look at an example and go back in time, you could just click on it. So I clicked on this dragonfly, and then you'll scroll down and you can see here, this is what it looks like. This is how it played out. This is where you placed the trade, kind of market went sideways and matured enough and closed out the position. So there you have it, folks. And I want to show you really what I think is probably the best feature of all. I'm going to switch screens here. How about the trade alerts? So these are one-touch responsive trade alerts where you receive the alert and you simply touch accept or reject on your phone or smart device or even email. So what I mean by this is these alerts, they're already integrated with your Altavest trading account. So they're active, interactive, live alerts. You don't have to log into some other platform and try to copy an alert. You just simply touch accept and place that order, and that's it. So let me show you how that works here. You'll get a text message. It's a link, and it takes you right to the page. This is a few years ago, but they look similar today, so don't worry about that. I need to update this. I thought I had. But you'll see a brief description of the trade. You'll get a graph of the trade. And this is important here. You'll notice the premium being collected, the cash required, and then the quantity, selling 10 of these condors, and the quantity is pre-selected for you. So everything is custom and tailored to you and your account. It gives you the 71 days till expiration, targeted annualized return. If you like it, you just touch accept, and that's all you have to do. So it's just that simple. People love those alerts. So we'd love to have you join us and be a member with a Theta Trader group of clients. We like to call ourselves an underground group of traders. But nonetheless, as a membership, here's what you get. You get everything with the Theta Trader software we just talked about. That includes everything you just saw demonstrated, a value over $3,500, and the trade alerts. Those are really indispensable. Those alerts are part of your Theta Trader software program, valued at over $4,400. Remember, those are live integrated alerts. And you get everything we just talked about, valued over $8,000. But beyond that, you get us, so private coaching. We are Series 3 licensed and experienced. So what we do is we set up a screen sharing session with you. You can ask questions, we'll talk to you and review your account, review your trades, whatever it may be. And it's kind of like having a co-pilot, valued at least $7,500 a year for that private coaching. So you get everything we just talked about, valued at over $15,500. And just to get a little corny, how about those extra bonuses I mentioned? Our proprietary research, valued at almost $3,000 with TradeScope and our commentary. And of course, those online video tutorials, those are part of the Theta Trader platform. So everything, to summarize, $18,504. And of course, that's not what we're offering that at. And here is the price that we would offer this when we did in-person presentations a lot before the pandemic shut everything down. But so we can do a lot better. And this is our retail price on the website. But for these live events, we love these types of things. And Traders Corner puts together a great event. So we can do much better than that. $597, that's your discounted price. The link is cf.altavest.com/TT for Theta Trader. That's my direct phone number. That's my direct email. It's a simple one-page form. You fill it out, submit it, and then we'll get you onboarded. There's the link there. Take a screenshot of that. And the best news of all, you have no risk really on your membership. Sign up and you can evaluate it for 30 days. And if for some reason you change your mind in the last minute, we'll refund that. And even if it's beyond the last minute, that's not really what we're about. We're not going to twist your arm. So 30-day money back guarantee. And people love this idea too. If you want a free membership, you have an account with us, $100,000 or more, you get a 100% rebate, $50 to $99,999. We'll rebate half of that membership. So people like taking us up on that offer. And a few FAQs, tax efficiency. Yes, futures and options are tax efficient. Big advantage to trading, say, with individual stock options. If you're trading with futures options like we are, you'll have a tax savings in this example over $2,000, or 14.64% rate of return compared to a smaller amount otherwise. But I won't spend time going over that because I know we're short on time. No more itemizing each trade. You get your 1099 with your P&L, and that's all you need. So do consult your tax advisor on that. And IRA, absolutely. Contact us for that. We have basically those types of accounts opening just about every week. And we talked about the E-minis. Well, they're liquid, they're efficient, they're cost effective. Record volumes on E-mini options. Average daily volume, 1.63 million contracts, a gain of over 23% year over year. Same with the NASDAQ and E-mini Russell option volumes, just exploding. And why is that important? Well, first of all, you get superior execution according to the CME group, cost savings compared to the SPX options, tight bid offer spreads, deep liquidity. And what that means is if the algorithm is looking for calls and puts to sell and buy, and calls and puts to sell and buy, and more, it's going to find them. It's going to find those strikes that it's looking for. And with the Theta Trader Dragonfly strategy, with the E-minis, you can do it as one order at one price. You don't leg in. If you try to do this with stocks, you can't do it with a Dragonfly. I've tried it. I've tried just about every platform. Maybe something's out there I don't know of, but you have to break it up into two separate orders and then try to manage it as two separate orders or spreads. So Theta Trader allows you access to sophisticated option strategies. And here, these are retail stock options traders this woman's talking about. Retail investors trading stock options only have access to basic call and put options. They don't have access to spreads and more sophisticated strategies. And so she's talking about basically the retail crowd only being mostly options buyers. But that's really how rookies trade, because time and theta is working against you. And here she is again. And she mentions the appeal for the retail investors to only buy options is that they're much cheaper, but your potential for profit is not that high. In 2021, 11% of Robinhood users made options trades, but of that amount, fewer than 1% actually made a multi-leg options trade or a spread trade. So more advantages with what we're doing. We're just trading a few markets, not thousands. We're not filtering through thousands of markets. Efficient margin versus stocks. There's a clear cost structure involved. Everything trades at the CME Group's electronic Globex exchange. Every order is treated equally. There's no payment for order flow nonsense. None of that misnomer of free stock trading. No such thing, folks. In fact, free stock trading is probably costing all of us more money than just paying commissions. They say it's commission free, but Robinhood customer orders were executed prices inferior to other brokers' prices. So anyway, so there's no payment for order flow with us. Your commissions are 5 1/4 round turn all in, and you'll see big box brokerages with what looks like lower rates, but that's only per side. That's only when you get in, and then they charge you the same on the way out, and then they don't count the exchange and regulatory fees. And when you add it all up, it ends up being more sometimes than what we charge. So our rates are competitive. Also, everything is net of all trading cost in Theta Trader, and of course, everyone uses Theta Trader differently, so everyone gets different results. And you can trade. We recommend a $20,000 minimum account, and we like the idea of improving diversification in your portfolio, lowering risk. This is what you call an alternative asset class. What are you really hedging against? Well, how about inflation? I don't need to show you this. We're kind of running low on time. But the leading economic index here, it's just down, down, down. And when it's down in these levels, a recession, at least historically, has always resulted. So we'll see what happens this time. So again, just to summarize the benefits, you don't necessarily have to pick directions. You don't have to try to day trade the chop. You have a wide margin of error with these non-directional strategies. It can be a big time saver as well. This guy here was trading 10 to 12 hours a day. I don't think most of us have time for that. So we like the diversification it offers. And look at this, the public household stock allocation at an all-time high. That might be a contrarian signal that we need to keep in mind. The S&P is not as diversified as you might think. Maybe you've been following this, but the top 10 stocks are 40% of the S&P 500 market cap. So a lot of distortion going on. Just the other day, NVIDIA was over 32% of today's positive momentum. I think that was 2 days ago. Kind of crazy. And how about this? 80% of the S&P was red, an average of down 1.28%, but the index was still green just because of one stock. Here's the equal weight S&P. So if everything was equally weighted, it's dropped down to levels not seen since 2008. Here's what it looks like here. The equal weight versus the S&P, they're kind of dislocating, you should say. The E-mini Russell, we've been doing that a bit lately, so you might want to look into the E-mini Russell 2000. There's no big tech in it. You can see the Russell here diverging from the S&P. Kind of interesting. So just to summarize it here, folks, you get everything with your Theta Trader membership and the personal coaching. You get signed up at that link, and basically we'll get you starting with the onboarding process. You'll begin accepting trade alerts as well. And we think the automation helps control your emotions. So I thought that was kind of funny there. Maybe I'm the only one, but everything that we just talked about, algo-driven options trades, bull, bear, non-directional, you get that trade simulator. The one-touch options alerts, they come to your email as well. You just click the link there, come to your dashboard, and come to your phone. You just touch that link, and then you'll see what it looks like there. You just touch accept. And oh, one thing too, you can change the quantity on alerts. If you want to go down with the quantity, maybe the alert comes to you for a quantity of 10, you only want to do 7, that's fine. You can always change that too. So we have some customization there. And that's the last slide. Let me see if there's anything here. We are the brokerage firm. Someone's asking. Altavest is the brokerage firm. So good question there. And yes, it does require an Altavest account for the alerts. We recommend 20,000 as a minimum. So those are all good questions. But you've got my phone number, direct line, and my email. Oh, in fact, if I have just, do I have just one more minute? If I don't, just cut me off. I want to share one more thing.
Yeah, you got 1 minute.
Okay, I'm kind of losing track here.
That's okay. You're doing good.
All right. I want to go back to the dashboard. I think an alert just got sent out. Let's see what that looks like on the dashboard. See if it came in. Maybe I'm mistaken. I don't have my phone and everything that close to me, but I heard it ringing from the other side of the room. But that might be an alert. Oh yeah, here we go. So this is what it looks like on your dashboard when an alert comes in. So you can view it. And this is just the dashboard. If you get it on your phone, your text message, you saw what that looks like as well. So either way, you can always have access to that alert. So here's a Russell 2000. So everyone gets a free alert, real time here, folks. And like I mentioned, here's the quantity. You can go down. Maybe we'll just do 16 of those just for the heck of it. And we'll go ahead and accept that alert. And there it is. All right, folks, that will wrap it up for me. So I welcome your phone calls and emails, and look forward to having you on board, and use that link, get yourself signed up before Friday night at that special offer.
Hey, thank you, Eric. That sounds incredible. Ladies and gentlemen, if you're interested in having trade alerts connected directly to your trading account and without any screen watching, have the ability to accept or reject the trades on your alerts or on your smart device, these recommendations are configured by Theta Trader, which leverages a sophisticated algorithm to configure high probability options trades. Then Mr. Erik Gebhard of Altavest has a solution for you. We've placed this special offer in the chat box, as well as contact information. And you can always find Erik at altavest.com. That's altavest.com. Thanks, Erik. We appreciate your time today.
No, thank you for having me. It's always fun, and I look forward to taking a peek at some of the other presentations too.
Oh, great. Hey, that was really good that we were able to see an alert real fast there on your website live.
Yeah,
that was pretty cool.
Kind of fell into place. So yeah, that worked out great.
It did work out great. Thank you, man. I appreciate it.
Thanks for having me. Bye-bye.
You're welcome. I did mention at the top of the show that we had a great lineup today, and our next presenter is no exception.
Our next presenter has mentored traders from beginner to Wall Street traders. Since arriving from Ukraine to the US with just $60 in 1989, she has built several multi-million-dollar companies. Such an incredible story right here. Our next presenter is very passionate about her students and proprietary alpha Fibonacci systems. She holds multiple degrees and is a classical pianist, marathon runner, a wife, and a mother. She sounds like an incredible trader to me. Ladies and gentlemen, here to present how you can trade as a strategic hedge fund trader is Mrs. Alla Peters-Plocher of Fibonacci Trading Institute. Welcome back to Traders Corner, Alla. And let me make sure I got your last name correct as well. Oh, I think you're on mute.
Thank you. Can everybody see my screen? Please confirm.
Yes, we can see your screen.
You see the projection with webinar slide? Yes.
It looks like what you have here is you got looks like you're using NinjaTrader maybe, and you got some charts up.
We're looking at the wrong monitor. I have multiple monitors. So one moment, please.
Yeah, take your time.
Okay, hold on. Okay, it looks like I need to project because it keeps changing to different monitors. Do you see my slide now?
Yes, Fibonacci Trading Institute.
No, how you can trade. I want to see, make sure you see the webinar slide.
Yeah, how you can trade as a strategic hedge fund trader on all instruments.
Perfect. Let's start. Thank you.
All right. Yeah, you're welcome. Can I ask, how do you pronounce your last name?
Last name Peters-Plocher. My joy and pleasure being here with you. Thank you, thank you, thank you. Thank you, traders. It's amazing to be with you. Good morning. In this webinar, I will be presenting how you can trade as a strategic hedge fund trader on all instruments, as I've been teaching already for the previous 5 hours this morning. So first, I would like to remind you that every single thing you will see in this webinar is to educate you and empower you. Nothing constitutes a financial advice. All software demonstrated as is, and no student had ever been paid for testimonials. And I hope you recognize risks involved in trading and you trade only with risk you can afford personally on all instruments, all time frames, all platforms. In this webinar, we will cover how strategic intelligent hedge fund traders think, prepare, and trade. How to trade with institutional entries, strengths, and exits. We will review future stocks, crypto, and forex in current and prior markets. We will discuss how alpha Fibonacci traders trade in US and globally since 2011. And most importantly, how you can trade as a strategic intelligent trader on all instruments, all time frames, all platforms. Also, I would like to remind you, when you come to the fibinstitute.com and you see the invitation to our trading room, simply sign up and you will be invited to our trading room where you can see Alpha Fibonacci trading system in the live markets, and you can ask questions about any instrument of your choice. So briefly about myself, I live and breathe what I do. Alpha Fibonacci, it's all I have done since 2008. I hold multiple degrees. One of my degrees is critical key components, which I apply to empowering my students. My background, RN, BA, Johns Hopkins, psychiatry. I specialize in empowering human beings to wealth, to success, and transformation to drastically higher level in life, not just on financial basis, but also on ultimate performance level at every single level in this life. So since 2004, I discovered passion for Fibonacci. I started developing my own system. I saw the system in the live markets during financial crisis. I saw how system overrides fundamentals. And since 2011, I founded Fibonacci Trading Institute, Fibonacci Trading YouTube channel, Fibonacci Trading podcast channel, where students share success journeys. I live and breathe what I do. This morning, I already worked for 5 hours with students in Spain, in London, in Texas, in Florida, in New York, where every single trader has different trading background and trading alpha Fibonacci system on all instruments, all time frames, all platforms. I also this morning worked on full automation system that I will be presenting to my students this fall. I just came back from London meeting with my students. This is 2 weeks ago in London with our incredible team. Ken is a phenomenal crypto trader legend. You can listen to Ken's podcast and you can see movie Ken made about Fibonacci Trading Institute. And if you invite me to your wedding, do not be surprised if I come. And when student flies in to California, William Legend, it's my honor to absolutely meet with my students all over the world. Sam, another legend, put his daughter through Harvard trading alpha Fibonacci system on options. So what's essential to recognize? Trading is a final step that reflects all you are as a human being. So when you look around and see success next to you, you become success. Harvard study have shown the most important component in life, who is next to you. You observe that person's mentality, you observe that person's success, you observe that person's values. So the person next to you, trading solid system, traded globally, you become successful. You take identical steps. But if you look next to you and you see that 95% of traders who never make it in trading keep doing exact same thing, keep chasing lucky point, keep chasing cheap indicators, keep grabbing random trades with random entry, random stop, and random target, what is a smart thing to do? Walk away, exhale, understand that number one reason for failure in life is instant gratification. When you start recognizing that success in life requires identical steps, if you accomplish success in life, building another business, building incredible family, you simply have to apply identical rules. You have to make an effort. You have to practice. You have to absolutely play with highest integrity. But what is a crucial step? Solid strategy, solid proven rules. So when you stop chasing indicators, when you stop chasing cheap stuff that will never make you any money, but look good, so good after the fact, when you stop chasing lucky point and snap out from gambling mindset, everything starts changing. You stop gambling. You stop throwing random entries. You stop throwing random stops and targets. You stop thinking that many trades will make you many money. You start understanding that only quality trades will bring you financial success. You start understanding that top 5% prepares for trading day. Prepares very carefully with framing your trade with key retail and institutional levels in advance. You trade only with institutions. You ride mega billion-dollar power.